vision becomes a milestone when it helps make our lives richer with love and laughter. When it helps make a cleaner, smarter, and a more beautiful planet. So that you can set off on joyous new journeys and adventures. Building stronger bonds and bridging impossible distances, which take you from the ever new to the forever beautiful. Opening up vistas and windows to a vibrant new world. A vision becomes a milestone when it touches millions of lives every single day. Aditya Birla Group. Big in your life.
Ambitious kings and skilled craftsmen built vast kingdoms that are etched in our history. These structures were built with enduring materials and envisioned by brilliant engineers. This heritage has found its way into our future with Ultratech Cement. No other cement can claim to have the highest 28-day compressive strength, chosen by the very best engineers. Ultratech Cement stands the test of time. Stronger with time.
Established in 1980, China Harbor Engineering Company Limited, CHEC, is one of the pioneering enterprises in China to conduct international engineering businesses. As an overseas platform of China Communications Construction Company Limited, CCCC, a global Fortune 500 company, CHEC explores overseas markets on behalf of the CCCC and has established branches in more than 90 countries around the world, conducting businesses in over 100 countries and regions. As an international top-tier engineering contractor, investment operator, urban developer, and ecological manager, CHEC adheres to its philosophy, value orientation, and commits itself to upgrading a platform plus industrial leading strategy. CHEC enjoys complete industrial chain advantages and boasts strong resource integration capabilities in such fields as ports, buildings, roads and bridges, rails, comprehensive urban developments, environmental protection, pipe networks, and green power. It has mastered core technologies such as offshore deep water ports, offshore islands, long-span bridges, gauntleted track railways, and high-rise buildings, and is able to provide its global clients with packaged solutions and integrated services of investment and financing, consulting and planning, design and construction, and management and operation. Moreover, it has successfully promoted a large number of high-quality projects around the world. CHEC is a world-leading service provider of the whole value chain of ports. It has built a number of large-scale ports globally. These include Shanghai Yangshan Port, the world's largest offshore deep water port and largest container port, Doha New Port in Qatar, a dug-in port with the longest frontage that was built at one time in the history of port construction in the world, Abidjan Port in Côte d'Ivoire, the largest port in West Africa, and Ashdod Port, a vital gateway port of Israel. The third runway of the Hong Kong International Airport, and has provided a convenient, environmentally friendly, reliable, and brand new solution to the formation of global offshore land. Building construction is also one of the main businesses of China Harbor. CHEC has a leading edge in super high-rise buildings, prefabricated buildings, stadium construction, and other fields. For instance, the new Lisboa Hotel in Macau, constructed by CHEC, has become a landmark building of Macau. The Hambantota International Cricket Stadium in Sri Lanka, constructed by CHEC, successfully hosted the 2011 Cricket World Cup. CHEC will contribute to building a community with a shared future for mankind.
Well, let's start over. Construction industry of Sri Lanka, we can emphasize how understanding and navigate these tax issues can lead to a better financial management and sustainability within the sector. Good afternoon, ladies and gentlemen. Welcome you all to the seminar on tax issues concerning construction industry, organized by the Chamber of Construction Industry of Sri Lanka. I'm Sadisha, your event host today. We are delighted to have you here at GAP HQ for a forum filled with exciting, informative initiations and valuable networking opportunities. Of course, as per the objective of today's event, there will be discussions focusing on the impact of recent tax changes and strategies to mitigate these burdens, implications for the export of construction services. Furthermore, there will be discussions on construction industry and real estate development, and also taxes on cement industry and its implications. I would like to take a moment to acknowledge the dedicated partners who have made this collection effort possible. I'm honored to recognize the invaluable contributions of our main sponsor, Ultratech Cement Lanka Private Limited, and our co-sponsor, China Harbor Engineering Company Limited. Ladies and gentlemen, shall we all give a huge round of applause to express our gratitude to our main sponsors and to our co-sponsor for their involvement in this important initiative. Thank you. Now, to get the ball rolling, my first invitation of the day goes to Mr. Nisanka N. Wijeratna, CEO, Secretary General, Chamber of Construction Industry of Sri Lanka, to address the gathering. Before, let me introduce him. Mr. Nisanka Niyamal Wijeratna is a distinguished civil engineer and accomplished administrator with extensive experience in the construction industry and public service. He earned his BSc in civil engineering from the University of Peradeniya and obtained an MSc at UK. He is a member of the Institution of Civil Engineers London and currently serving as Secretary General CEO of the Chamber of Construction Industry Sri Lanka since April 2015. Mr. Nisankar plays a vital role in representing all construction industry stakeholders at the national level, and also his leadership has strengthened the Chamber's position as the apex body recognized by the Sri Lankan government. Sir, the stage is yours.
Good afternoon, President and members of the Board of Management, Council and General Membership of the Chamber, our participants who are present here physically and also online on Zoom, our sponsors, Ultratech Cement and China Harbour Engineering Company representatives. This seminar on tax issues concerning the construction industry was discussed by the Chamber for quite a while, but we had to postpone it due to several instances, several happenings. Firstly, the presidential election came, then the general election, so we thought it's not the correct environment. And we wanted the new government to settle down when we have this seminar. So that's why we are having it now. To give a brief background to the construction industry, I'd like to say since March 2020 up to end of last year, construction industry was continuously suffering from contractions due to many reasons, one main reason being the slump in the economy. Other reasons are high cost of materials, of course, slump in the economy, then suspension of capital works by the government, foreign exchange crisis, and then long delays in payments to contractors and consultants for work completed, works executed. Because of these, the construction industry was badly affected, and nearly over 300 who were employed in the construction sector have lost their employment. Prior to this adverse period, I'm particularly referring to period up to 2018. Construction industry was recording about 8 to 9% to the GDP. It employed about 1.4 million, which amounts to actually 20% of our population is dependent on this sector. So, enormity of the problem can be seen from this, because for nearly 4 years, construction industry was undergoing a slump without new works happening, and also existing works being suspended, and over 300,000 losing employment. So, because of this, many companies could not honor their debt obligations to the banks, and there had been a big clamor for suspension or postponement of pro rata execution, because banks have been at the throat of our companies. Fortunately, government agreed to extend the Parata execution up to end of December, I think. But now that deadline is not very far. So industry looking forward to have a more grace period. And then taxation, because that is the crux of this seminar. New taxes have been introduced and existing taxes increased, which also affected the industry when industry was in doldrums. In particular, I must mention that VAT had been reintroduced on real estate development, because when you impose VAT on real estate development, it becomes a cost to the buyers, because most of the buyers are individuals. In fact, this VAT was earlier attempted to introduce by late Minister Honorable Mangal Samaravira. Then we made representations and it was withdrawn in 2018, I would say. So again, now it has been introduced. So, I mean, real estate developers are in a real fix because of that. And also, VAT was increased to 18%, so that also affected most of the construction projects. So, industry is clamoring for some concessions. But looking at the broader picture, I think the hands of the government also is tied. So we are not sure to what extent they can give concessions, because when I looked at the IMF requirements for in 2025 budget, the government has to achieve a current account balance surplus of 2.3% of GDP. But during the last 74 years, we achieved a current account surplus more than 2.3% only in 1 year. That was in 1955. After that, we have never reached this target. In 2023, I think it is about 1.8%. Then the next ballpark figure of the IMF is government revenue should be 15.1% of the GDP. Now again, in 2023, it was 10.2%. So we are still short by 5% of the GDP. Now GDP is about, I think, $83 billion. So you can see government revenue, there is a shortfall about $4 billion, which is about 1,200 billion rupees. In 2022, the government revenue was 8.4% of the GDP. That was after various reductions given in 2019. And in 2016, it was 14.1%. So now the target for the government is to reach 15.1%. So I think going from 10.2 to 15.1 and on the government revenue and current account surplus 1.8 to 2.3 are very tall targets. So we have to make, of course, the industry needs concessions. So we have to see how the government tries to balance the two and try to give concessions, because without concessions, economy will not expand. So it's a chicken and egg situation. So we have to see how things turn out with the next budget. During this seminar, there will be 4 good presentations. Impact of recent tax law changes and mitigating tax burden by Mr. Suresh Perra. from for KPMG. Then taxes affecting the construction industry and real estate development by Mrs. Asanti, Commissioner Tax Policy. Then taxes on cement industry and its implications for construction industry by Mr. Sandeep Kohli. Then taxes affecting the construction industry, Mrs. Priyanti Manike from Sanken Overseas. So I think these are very good presentations. So I hope you will learn a lot from these presentations. Thank you for taking part. And also again, I used to thank our sponsors, Ultratech Cement and China Harbour Engineering Company. Thank you very much.
Thank you very much, Mr. Wijeratna. In the words of Mr. Wijeratna, he highlighted over 20% population in Sri Lanka depends on this construction sector. And also, as I remember, he mentioned government has some targets to increase their revenue, and also this industry needs some concessions. With that valuable words, let us kickstart the seminar with warm opening remarks by Architect Jayantha Perera, President, Chamber of Construction Industry of Sri Lanka. First, let me introduce him. Architect Jayantha Perera is a founder, director of the Green Building Council of Sri Lanka, and currently he is the chairman of the Green Building Council of Sri Lanka. He is the current president of the Chamber of Construction Industries Sri Lanka and the president of the University of Moratuwa Alumni. He is a current board member of the Construction Industry Development Authority. He was a past president of the Sri Lanka Institute of Architects and held the position Chairman Architect Registration Board Sri Lanka. He was the chairman of the Committee on Architectural Education of Architects Regional Council Asia, and also he is a past chairman of South Asian Association of Architects. He was the chairman of communication of the CAA and also served as the UIA Work Program Director for Responsible Architecture. He is the founder chairman of the City School Architecture. Dear sir, the stage is yours.
Thank you for that introduction. Good afternoon, everybody. Our presenters today, Mr. Suresh Pereira, Principal Partner KPMG, just arrived. Thank you very much for being here on time. Ms. Priyanti Manike, AGM Finance of Sanken Overseas. Mrs. Ashani, Commissioner Tax Policy Land, Indian Revenue Department of Sri Lanka, and Mr. Sandeep Kohli, Director and Country Head, Ultratech Cement. And today's moderator will be our own Mr. Tumilan from our council. Thank you all for accepting our invitation and to be present here today. Board of Directors of CCI, Council members of CCI, honored guests and ladies and gentlemen. It is my great pleasure and honor to welcome you all on behalf of the Board of Directors of the CCI for today's seminar on tax issues concerning the construction industry of Sri Lanka, which is organized by the Chamber of Commerce, Chamber of Construction Industry. In collaboration with KPMG, the Department of Inland Revenue, accounting specialists in the construction industry. As you all know, the construction industry is in a very bad shape due to issues and subject that we are going to discuss will definitely help the industry in the context of education and tax to help the industry to be sustainable. On behalf of the CCI, I warmly welcome all the media coverage partners who are here with us today. I wish also to thank our sponsors of today's event, main sponsor Ultratech Cement, and co-sponsor China Harbour. I would not go on talking because the specialists are here to do the talking. So I would like to conclude my short speech and invite all the experts to make their presentations and request the audience to stay on to get this wonderful experience on the issue of tax in our industry. I wish everyone a successful and a fruitful event. Thank you.
Thank you, sir. Next, it's my esteemed pleasure to invite Mr. Suresh Pereira, Principal Tax and Regulatory, KPMG Sri Lanka, to conduct the session titled Impact of Recent Tax Law Changes and Mitigating the Tax Burden on Construction and Real Estate Development Companies. Let me first introduce him. Mr. Suresh R.I. Pereira is a fellow of the Chartered Institute of Management Accountants, UK, Chartered Global Management Accountant, and attorney at law. He's a principal in tax and regulatory at KPMG Sri Lanka. With over 25 years of experience, he is recognized for his expertise in taxation, accounting, and legal affairs. Mr. Suresh also serves on the KPMG Middle East and South Asia Tax Steering Committee, contributing to the strategic direction of tax practices across the region. In 2024, Mr. Suresh was honored as the Tax Practice Leader of the Year by the International Tax Review, a testament to his leadership and contributions to the field. He has also held influential roles in professional bodies, including membership in the CIMA Global Council, a 2-year tenure at the CIMA Sri Lanka board, and serving as a regional board member of AICPA for the Middle East, South Asia, and North Africa. As an esteemed educator, Mr. Suresh is a lecturer in taxation, sharing his knowledge with students at various institutions, including the Master of Law program at the University of Colombo. His blend of technical expertise, leadership roles, and dedication to education has cemented his reputation as a distinguished professional and true leader in the field of tax and regulatory practices. Mr. Suresh R.I. Pereira, over to you.
Good afternoon, everyone. Right. Let me begin by thanking the organizers for inviting me to address this difficult topic. I know construction industry is also suffering, but at the same time trying to find a solution for this suffering is also a big challenge, but let's see what we can do in this seminar. So what I will do is first I will cover the provisions that are applicable to the construction industry, and in the second part I will elaborate with regard to the real estate companies. So let's begin with the construction company. Now, as you all know, in 2019 there was sunshine for all the industries. All the taxes went down, and thereafter things changed, and we had 3 types of companies. We had sin industries, alcohol, betting and gaming, tobacco, which were taxed at a higher rate, and then the standard rated companies at the 28%, and the preferential companies, including the SME, going at 14%. So now what happened was, in order to face the financial crisis, in order to block the, cover the tax gap that was there when IMF or other, we also understand that in Sri Lanka's tax collection is very low, tax to GDP is very low, and I think it is fair to expect more taxes to be collected. It's also an inevitable thing to do. So we had that situation where the new government or the new president at that time decided to increase the tax collection by immediately, because they did not have time even to plan there. So they took the shortcuts. They increased the tax rates in order to collect the taxes. So how did they do that? I don't. Okay. I don't think basically there was a scientific thing that was done. I think we took a shortcut, and what did we do? We created this concept of uniform tax rates for all the companies, 30% rate for all the companies. So major thing that we witnessed there, the 14% companies, there was special preferred industries as well as the SMEs that were at 14%, went up to 30%. So it was a more than double increase for the lower tier. The standard tier, that is the normal companies which were at a 28%, went up by how much? 2%. So that's why I said that there wasn't much scientific manner in which the rates were decided. They decided, okay, we are going to have a uniform rate at 30, and that resulted in the preferential preferred industries lower rate going up more than double, whereas standard rated companies went up more than only by 2%. And then the sin industries, which was at 40, remained 40, but now as per IMF recommendation, and I think most of us also have pointed out that is to go up by 5%. So it will be 45% probably after the next budget. That's what we see. Now the point is, when you say basically a good or the purpose of a tax system, you describe using 4 R's. What is the first purpose of the main purpose of a tax system? Yes, collection of revenue. So first R is revenue. Second one, to do the job of the Robin Hood. What is that? Redistribution. You try to take from the rich and give it to the poor. You try to redistribute the wealth in the country. Second R. And the third one is called repricing. What is repricing? You use tax as a tool, tax rate as a tool to either encourage industries or to discourage industries. So that's why we find the alcohol, tobacco, etc. at a higher rate, whereas those industries, health, education, etc., so tourism, even construction, was at right, okay. Can you hear me? Sorry. Okay. Is that okay? Right, okay. So representation is the 4th R. So basically, a tax system has purposes. So repricing is also a purpose of a tax system. In other words, you use tax as a tool to encourage and discourage industries. Now, why I'm emphasizing on this aspect here is, now I know the purpose of this seminar. Okay, we want to see what we can do to get the best situation in a difficult time for the construction industry, for the real estate industry. So, question that flows from here is construction industry is an industry that should be promoted compared to the others. Yes, everything should be promoted, but compared to the other industries, should construction be considered a preferred industry? Should preferential tax treatment be afforded to the construction industry? Now that is the other debate. Right, let me hear from the audience. Why should we treat construction industry different to other industries? Let's say a standard manufacturing company and a construction company. Should these two companies be given the same tax treatment, same tax policies, or should there be preferential treatment towards the construction companies? When it comes to something like education, it is easy. Yes, everyone wants to promote it is in the best interest of the nation that the citizens of the country be given a good education. So it's easy to justify why education should be given a preferential tax treatment. Same comes when it comes to essential foods also, right? Food items. So we heard this aspect during the election time also, leading up to the election time also. Education was pointed out, essential food was pointed out as eligible or as being promoted for preferential tax treatment. Now the question is, what about the construction industry? Should construction industry be in the same category? If we can point out, if there is an argument for that, yes, we go back to the 4 R's. What is the purpose of the tax system? A good tax system always use tax as a tool to encourage and discourage also. So in this case, we are looking at encourage. So if we can point out that construction industry at this point is a priority industry. What is our priority in the first place to go running the economy? We are in a financial crisis. We have a debt. We have to come out of this financial crisis. Maybe it will take 10 years, 15 years. Will the construction industry help in that journey? If the construction industry can't take up this taxes, and if it goes down gradually from here onwards, will that be a barrier for us to come out of this financial crisis? In other words, is the construction industry important for us to develop the economy? That is our approach, right? Yes, you said something. Right, okay, let's start from a construction industry. How will the construction help? Yes? Right. So what does construction do? Construction basically brings about yes, so let me put it this way. Construction creates structures. You need structures to carry out other economic activities. So construction results in different equity streams coming. So let me see, I have a slide. See. When you take construction also, you can divide. Construction is a one word. So far in the history of Sri Lanka, when it comes to taxes, we look at the construction per se, and then we give the tax concessions to the construction industry per se. Now, can we divide this construction also into segments? Why I say that is, now if we try to go and ask for tax concessions for the construction industry per se, which is a big area, we have to keep in mind always tax concessions being given means there's a loss of revenue to the Inland Revenue Department. So a weak point in incentives here, particular industry, and give it, and then sometimes we find within that industry there are income streams that do not deserve the concession also. You can recall somewhere in 2009-10 thereabout, and thereafter again revisions happened in 2013 thereabout with regard to the foreign currency earners. Foreign currency earners were given a tax exemption, 13 triple D, 13 4Ds. So now there, what happened was the idea was noble. No idea was to give tax concessions to the foreign currency earners to Sri Lanka. But at the same time, there were avenues where foreign currency came to Sri Lanka, but at the same time, they were who were happily paying taxes and who had nothing to do with, how do you say, increasing their volumes or whatever, also got the tax exemption. Controversial area, I will not go into that one. But what I'm trying to tell is, okay, when you look at the construction industry, if we can divide the construction industry to different segments, and then we evaluate and see within the construction industry also there are important areas that will immediately benefit the Sri Lankan economy for us to navigate this financial crisis. So if we can do that thing, and if we make a representation for tax incentives of that particular segment of the construction industry, it may be more practical rather than going and asking tax incentives or tax concession for the whole industry. I know now I'm going to a controversial area again. My participants here, I'm sure, will be coming from different segments, but let me see where you can go. So you can see the residential construction, one segment. Government need taxes. So should government sacrifice their current tax stream and prioritize the residential construction compared to the commercial construction, compared to the industrial construction and the infrastructure construction? So out of these 4 types of construction categories, of course there may be other areas also, but I took the most common 4 areas. What do you think is directly impacting or directly helping to grow the economy? Residential construction? No, correct. I don't know. I do not take sides here because I know that there will be different interest groups. My one is basically I put once in industrial construction, because what do we have to do now? Basically, come out of this financial crisis, we need to collect more money. What is the strategy that is right now? Collecting tax revenue to serve the debt payments or for other things also. Many of us will agree that is not the, yeah, in the short run you can do that thing, but that is not the strategy, or that is not the only strategy that Sri Lanka should be using to come out of this financial crisis. We need to increase our production, we need to increase our manufacturing, we need to increase our exports. So if we need to do that thing, what do we need? We need factories, that kind of things coming up. So I'm trying to build up an argument here. So the immediate tax concessions, if you are asking, we can ask for that particular type of, that particular segment of the construction industry. Each one can have different thinking, but I thought basically maybe that would be easy to justify, and at the same time it will be sometimes possible, or maybe because at this time if you ask the tax policy makers, where can we give the tax exemptions, where can we bring down the taxes, you will have resistance. IMF will also not going to be very happy with regard to reducing tax rates, giving exemptions and the incentives. So, but however, if we can justify, okay, these areas have to be given the priority, because giving tax exemption here, when you do a tax exemption is always an expense. There's a cost-benefit analysis to be calculated. So when you take the cost-benefit analysis, maybe sometimes we should be able to justify industrial constructions segment being ring-fenced and looking at tax incentive. Ashanti, in agreement? Tumilan is not happy with me because he's not in that entry. Right, so that's one technique I think that we can look at. So let me go back again. So overall, if you see, okay, why we should promote the construction industry. Yes, it stimulates the economic growth and helps in infrastructure development. In case of the areas to Milan is in housing affordability, basically. Now, there also, again, I would say there are two areas. We have the luxury upmarket one as well as the middle and the low-end housing sector. So those two have to be looked at differently is my personal view there. And what is the negative point? Inland revenue or the state is going to take a big hit moment tax incentives are given. Right, so the loss of tax revenue. And also it creates inequity. Just like this seminar, we are focusing on the construction and the real estate industry. You give tax incentives, the tax exemptions to one industry in a situation where all of us are basically, all the other industries are paying at 30%, then you are going to get the lobbying coming from the other industries as well. Who's at the receiving end at the end of the time? End of the day, it's the state losing the revenue. And so the inequity is the negative aspect there. And also, when you give tax incentives, the exemptions, there's always room for abuse. Sometimes you try to do the tax planning, shift the expenses from one area to the other area, so that kind of things are taking place. And also, the big question, if you give a tax incentive to a particular industry, let's say construction industry, actually will there be an impact? Will there be an impact? So those are the things that we need to look at. Right, so when you look at the techniques of granting, techniques used in other countries for granting tax incentives to the construction industry, common ones we find in different countries, reduced corporate income tax rate, what we also had in Sri Lanka, 14%, as opposed to the standard rate, and then the tax exemptions, then the concept of accelerated depreciation, or what we call the enhanced capital allowances, that also we have in our act in Sri Lanka. Then established a special economic zone with preferential tax treatment. I'll speak a little bit about this area. Actually, most of the construction companies and the property development companies are not aware. We are all aware, but at the same time, we have never thought about this thing. We have a special economic zone in Sri Lanka, the port city, unbelievable tax concessions that are there, but at the same time, I'm not sure whether Sri Lankan construction companies, real estate companies have seen the potential, the fact that they can enter this economic zone. My understanding is right now one developer is involved, but all Sri Lankan developers can look at this thing that is already there. So our tax rates are high, tax barriers are there, so our industry is going down, difficult to survive. That's a common theme that I hear. But at the same time, there's opportunity if you open the ice and sea. Right, so this port city one, I'll come to that one later. Then of course, tax credits for investment in construction and machinery and equipment. We also had an exemption, I have a slide on that, at the point of importation of machinery related to construction industry enjoyed tax incentive. It has been taken out now though. Right. Then who is the construction contractor? This is the technical part. Who is the construction contractor, and then who is the subcontractor? Should both be given the concessions, or it is only for one, or one company, both activities are being carried out. That is what is meant by both. It's the construction and the property development. Property development, in Sri Lanka, there is no special treatment. Normal tax rules apply, normal tax rates apply. It's for the construction industry that in the history where the concession have been granted, right? So when you have both happening in one company, where are we going to, how are we going to apply the this concessionary rate? So there are issues that are there in relation to that, where you have to create the segment, the PL and all that ones, right? touched on. Right, so now this is the pain. I can hear the pain of the construction industry. Now if you look at, we go a few years back and look at our tax rates. Up to 2017, income tax rate was 12%. And in 2018, it went up to 24%. And then in 2019, when the big tax change happened, 24 was reduced to 14%. I can recall in 2020, also beginning of the 2020, again we were addressing a seminar, basically praising the government, etc., the policy makers at that time about bringing down the rate. That's why I'm mentioning that part. And then that, as we stand here from 2022, the rate went to 30%. So from 2017 or say 2015 thereabout to today, rate has gone up from 12% to 30, up to 30%. So big change. I understand this is not very happy situation, and also I understand construction industry, the planning happens covering long term. This is not like trading goods. So when the rates change, the construction companies, the property development companies, where they calculate their feasibility of the projects, become absolutely challenging when you have this kind of tax rate, income tax rate changes taking place. Not only income tax, we can see how the VAT rate that is applicable to the construction industry as well as the most of the industry in Sri Lanka has changed. I have taken the period starting from 2011. You can see from 2011 to 2014, we had 12%, and from 2015 to 2016, 11%, and then it went up to 15% again, and then it came down during the happy period, 2019, to 8%. Then it kept going up, 12%, 15%, and today again 18%. And in addition to this variation, which makes it absolutely challenging again for the construction companies and the development companies to plan their projects, you can see the time gap within which the rates change also. Now, if you look at Australia, from the time of implementation of the GST, the rate has not changed. It remains as it is. If you take Singapore, our GST and then which became a VAT thereafter, we copied from New Zealand. New Zealand only three times only the tax rates have changed. But if you look at from the history in Sri Lanka, we have gone up to, we have about 12 times we have changed the tax rates, the VAT rate. And then we had NBT, Nation Building Tax, at 2%, and then there was a period again from 2019 to 2022, we did not have a tax on the turnover, no NBT, no SSCL, and then NBT in another name was introduced as Social Security Contribution Levy in 2022. And when it comes to income tax, again, as to how to calculate income from long-term contracts, that's the technical part, from construction projects also. There's a separate way of calculation. I won't go into the technical ones in detail, just to touch on that aspect as to how to do that thing. And again, we can see, if you are a construction company that is engaged in projects outside Sri Lanka, and if you happen to take goods from Sri Lanka to that country, let's say you're doing a project in Maldives, and you take goods from Sri Lanka to Maldives for that project, then that is considered an export, and you're given the 0 rating. So that's another provision that's there. And then we had machinery used for construction industry. There's an exemption that was there, and that exemption has been removed from January 2024. And again, there was the exemption for clay roof tiles. That exemption has also been removed from 2025-2024. And Then again, there was exemption for 19 years. This exemption was there in relation to VAT, and that exemption, what is this exemption? Exemption granted on import of goods to any project approved by the Commissioner General of Inland Revenue. That exemption also, after 19 years, has been taken out. Now, January, what happened was, in Sri Lanka, at one point, we had over 150 or more than that, the way you count, basically exemptions. All those exemptions were taken out, and right now in the Act we have 40 odd exemptions only. So in that process, these exemptions were also taken out. And then also, construction contractors are affected by the social security contribution also. This social security contribution levy is a little bit different to the other taxes because this has this cascading effect coming. So when you are importing, at the point of importation of any article, construction contractor, not only any import of the articles, have to pay SSCL. And if you are in the business of manufacturing any article, manufacturing of any articles that are needed for the construction, at that point also there is SSCL 2.5. And if there is a service component related to the construction, that also is subject to the social security contribution levy. And retail, so sale of construction material, that will also have an impact with regard to impact coming from the social security contribution levy. Now, since this cascading effect embedded in this particular tax, there's going to be a tax on tax also. So it's a bit of a complicated hit that comes from social security contribution levy for all the other industries also, but construction industry, this is also has a big impact. So we have in the social security contribution levy, there is an exemption for plant and machinery or equipment import on temporary basis for large scale infrastructure development projects. And once upon a time in Sri Lanka, I don't know how many of us will remember, there was this tax called Construction Industry Guarantee Fund Levy. It was taken out in 2016. While we are asking for concessions, let's keep our fingers crossed and pray that this tax will not be introduced again. Because right now, what the government is looking at is revenue generating proposals. So hopefully this kind of thing will not come again. Even if you don't get any concessions, if you don't get this thing also coming again, it's a blessing. Just a snapshot of the construction industry guarantee levy that was there. So it was imposed on the value of a contract. If the contract value was below 15 million, it was not there. So the imposition was for contracts over 15 million. And the rate changed from in slabs, the rates changed from 0.25 to 1%. Right, so what I did was I just gave you an idea with regard to the specific positions that are there for the construction industry. And now I'll move to the property development and the real estate. Now, there's something very important with regard to the this area, real estate industry, in the recent IMF report that was issued in August. So, right now I think there's a question mark whether this tax called the imputed rental income. How many of you all are not aware of the imputed rental income tax? I think we have seen this, it's not in operation, sorry. Okay, imputed rental income tax is a tax that has been suggested by the IMF to be imposed to commence after 1st of April 2025. So some sort of work in relation to this also has happened, but I believe with the new government being elected, new government is not in favor of this tax. But at the same time, we don't have a concrete conclusion whether this will come or not. We have to keep our fingers crossed and see whether this will be introduced in the budget. Right? So, So here what happens is if you, the substance of this tax is, if you own a house and you fall within that specific category, then a tax will be levied on owner-occupied house. If the house is rented, no tax. If you own it. And also if you have a house, it is closed. That means it is vacant. Again, this tax will be there. And the mistake or the unique thing about this is you don't get money into your hand. It's how it is calculated is there is a deemed rent. If this house that you own, that you are living in, if it is rented, what is the revenue rental income that you get? So a deemed rental is considered, and on that you are asked to pay tax. So easy way to understand is this is imaginary income. On imaginary income to pay taxes. So this tax is there in few countries in Europe, like Denmark, Netherlands, etc., Switzerland. That has been introduced in those countries to fix a particular tax situation in those countries. In those countries, the owner of a house is entitled to get a tax deduction for repairs and the maintenance, and also for housing loan interest, mortgage. So two peculiar tax provisions in those countries which are not there as of today in Sri Lanka. In Sri Lanka, I own a house, but I don't get a tax deduction for repair and maintenance. And as of today law, I'm not entitled to deduct housing loan interest also. There were periods basically housing loan interest was allowed in Sri Lanka, not anymore. So our tax background, tax framework is not the tax framework in Switzerland or the Netherlands. So why they introduced that one, what is called imputed rental income tax in Switzerland, Netherlands, etc., is to create a parity between the owner and the person who is renting, the renter. Person who is renting cannot get these two deductions, whereas the person who owns a house can get these two deductions. So the policymakers thought, okay, that is unfair. So therefore, we are going to impute income on the owner-occupier, and against that income, you can deduct these two expenses. So create an equity between the renter and the owner is the reason why in those countries, the imputed rental income tax was introduced. So it is that tax that's basically concept that is being introduced in Sri Lanka, but according to my understanding, the way it is to be implemented now, with giving an exemption also, not much of revenue will be collected. So I'm not in a position to tell the exact fate of this thing, whether it will come or not, but seems it may not. But however, if this comes, interesting is, I do not own a house, whereas I want to pay tax. What would I do? As opposed to owning a house, I will rent a house. I'm better off renting a house rather than owning a house. So if that comes, so in our country also that trend will come, which is not very correct because that goes against Sri Lanka's housing policy also. What is Sri Lanka's housing policy for every person to own a house? So this basically tax will create a different trend in the country. Right, property development companies. No, again, as I said, basically tax regime in Sri Lanka has no special tax incentives or tax rules in relation to this segment, property development. Property development is covered by the normal tax rules. It's the construction company in the future, in the past, special tax rules were there, right? So income tax is at the rate of 30%, like all other companies in Sri Lanka now. So this is the point that I said. Right, so I'll ask the same question now. Like the construction contractors, should property developers be given a preferential tax rates, tax incentives? Unlikely, because in the past also we never had anything. They will be governed by the normal tax framework. So I think we should not build up hope, think that we will be able to get a special tax regime for the property development company. It's unlikely. If at all, we may be able to streamline some of the income streams of the construction industry and create a justification why that particular stream of income to be given a tax thing. Just like what I've been, industrial construction profit streams may be justified to be given a tax incentive. The logic basically, right? So what we all want is a better tax regime, lower income tax rates for all the industries, right? So when I say property developers, whether we will be ring fenced and be given a special tax regime, to me, I don't think the policymakers will listen that much with regard to that. Right, so I think in this IMF report, again, there's another important aspect also with regard to the real estate, or I would say the property development area. As we all know, in Sri Lanka, supply of residential accommodation was exempt from the beginning. In other words, if you happen to sell a house, a residential house, there was no VAT, it was exempt. Commercial accommodation selling, there was VAT. Renting, both commercial and residential accommodation, there was no exemption. In Sri Lanka, it has been liable for VAT from the beginning of the GST time also. So now IMF is pointing out in their recent report to align with the international practices, residential accommodation, renting or leasing to be exempt from VAT. But at the same time, to create a threshold, and for that to be aligned with for our law to be aligned with the international practices there also, right? So that's again we have to keep in mind. Now, when it comes to the, I think it was in the year 2019, law change with regard to the residential accommodation in relation to condominium property. The VAT was imposed for the first time. 2016-17 there were discussions in relation to that thing, but in 2019 it was implemented, condominium properties to be liable for VAT. So sale, title passing to be liable, right? Not just the renting. So from beginning of 2024, the normal residential accommodation, not the condominium, was also brought within the VAT regime. Right, so this is the table that we have extracted from the IMF report itself, where they are suggesting our policy to be changed. So to improve the neutrality and fairness, Sri Lanka's VAT system should be aligned with the international best practice, including by imposing tax on the first sale of residential property. We don't have a thing called first sale of the residential property in our law. What we have is, if your primary residence where you have owned for 3 years, lived for 2 years before selling, there's an exemption. So my understanding is it is that thing that they are referring to here. So IMF suggesting that exemption to be taken out, and instead to cover the low income earners, create a threshold. So if you are, when you sell, the proceeds that you get is below that particular threshold, there will not be VAT. Whereas if you are selling a house that is very expensive, then you will be above that threshold. Then you will be liable, whether it's your primary house or not. So that's what the IMF is recommending. Let's keep our fingers crossed to see whether this rule will come in the budget. Right, so if you look at the tax rules that are applicable for, let's say, consultancy companies, real estate related consultancy companies, architecture firms and all that, normal tax rules apply. Income tax is 13, the VAT is 18. And when it comes to social security levy, social security levy is on 4 items that I showed you earlier. So since they are engaged in importing articles, it will be there, and with regard to the services also, it will be there, right? Sorry. Right, now let me see whether we can, the changes that happen, whether we are advocating reversing those changes. 14 became 30. I'm sure all of us would like, who are in the industry, 30 to come back to the 14. Would that happen? So to me, again, this situation, because of this situation, lobbying for that 30 to be, that 14% to be restored, I think may not happen, but unlikely. So that's why I said, if we are trying to ask an incentive, we need to be practical. Let's identify justifiable areas in the construction industries. That's why I talked about the industrial construction, where we can justify in the long run if we want to develop Sri Lanka. That is an area basically that specifically looked at by the policymakers. So now that kind of rationales to be used when we are asking for incentives. So construction machinery importation, we had exemptions. Those exemptions, whether we are going to request all those things, ask and see whether you will receive is doubtful, right? So what I said earlier. Okay, now let me give you some idea with regard to who are in the construction and the property development. The concept of the Colombo Port City. Colombo Port City is a special economic zone with sweeping tax incentives. So what are there are different types of investors. There's a primary investor, there is a secondary investor. Primary investor is the area that construction and the property developers should be looking at. The property developers say, why? You get income tax holiday up to 25 years. And after the 25-year holiday period, there's another 10-year period where only half the tax will be charged, 50% of the rate. If that regime is not looked at, that is the 25-year tax holiday area is not looked at, you have another scheme also in the port city where 300% enhanced capital allowances will be given. That means 3 times a tax reduction. And there is no VAT, and there is no dividend income tax. Then there are customs duty and other import duty exemption. So you get very, how do I say, very interesting tax incentives in this port city. So what is the criteria to enter there? As a primary investor, this is the only area where basically you need to have this investment criteria. And you have to make a minimum investment of 100 million USD for a plot of land there, per land plot. This money has to come from outside Sri Lanka. So some of the property developers who have foreign currency income can look at this. And at the same time, you can't use the money in Sri Lanka for this, right? At the same time, okay, you can look at a foreign loan sometimes to structure to bring the money from outside Sri Lanka. Whatever happens, you will bring money from outside Sri Lanka to enter the port city. So property developers here also have that opportunity of basically entering the port city and getting all these unimaginable tax reliefs that are there, and help the, I don't know, port city, which is totally brown right now with sand, to change the entire landscape. Because right now they are looking at investors or the property developers from outside Sri Lanka, but at the same time the scheme permits Sri Lankans also to property developers to enter that area, and right now there is my understanding, at least one Sri Lankan has entered. And of course, our act also has the capital allowances, but I won't go into the details. Right. Any questions? Sorry? Should I take the questions now or during the Q&A session? Q&A session? Oh, yeah, okay. Thank you, everyone.
Thank you very much, Mr. Suresh Pereira. I think many of you would resonate with Mr. Suresh Pereira's perspective. He elaborated on the impact of recent tax law changes in Sri Lanka and how to mitigate the tax burden on construction and real estate companies. Without further delay, it is my privilege to invite our next speaker, Ms. KGC Priyanthi Manike, Assistant General Manager, Finance at Sunken Overseas Private Limited. Let me first introduce her to you. Ms. KGC Priyanthi Manike is a highly accomplished finance professional with a proven track record spanning over 2 decades in finance, auditing, and strategic management. She currently serves as AGM Finance at Sunken Overseas Private Limited, overseeing financial operations across multiple international markets, including Seychelles, Maldives, and Uganda. Her career journey includes key leadership roles such as Senior Manager, Finance and Accountant, where she spearheaded financial reporting, tax planning, and internal control systems, ensuring compliance and operational excellence. Her earlier experience includes audit management roles at Jaisingh & Company, Vikramsinghe Dayananda and Company, where she conducted internal audits, tax advisory, and financial statement preparation for diverse industries. Academically, Ms. Priyanthi is a fellow chartered accountant of the Institute of Chartered Accountants of Sri Lanka and holds a BB Management Accountancy Special Degree and MBA from the University of Kelaniya. Ms. Priyanthi is recognized for her integrity, dedication, and innovative approach to financial leadership. Ms. Priyanthi will deliver the session titled Taxes Affecting the Construction Industry and Export of Construction Services. Over to you, Ms. Priyanthi.
Thank you for the introduction. Good afternoon, everyone. So first I must thank the Chamber for inviting me to speak about the challenges faced by the construction industry. Every industry has its challenges. Unfortunately, the impact on the construction sector has been more substantial and challenging. So, and also this has impacted not only the businesses in the industry, but also the overall company, affecting jobs and infrastructure development and even public projects. So today I will discuss some critical issues that are making things difficult for us. Moving to the presentation. Since the pandemic, we have seen the economic crisis and the dollar appreciation tremendously hit the construction cost. So this has made it difficult for our businesses to maintain profitability, especially with other ongoing challenges. So however, the good news is that we are seeing a gradual resumption of new projects. For example, the Sri Lanka Purchasing Managers Index, called PMI, for 2024 indicates signs of recovery, so which is encouraging. And this improvement gives us hope for the future, but we need to stay careful and work on achieving steady, sustainable growth. While things are improving, some challenges remain and continue to affect the industry. One of the biggest challenges we face is managing rising project cost. So this graph shows the cost of few categories such as housing, roadworks, water systems, and general construction between 2020 and 2024. So data extracted from the Construction Bulletin statistics as of September 2024, and this graph shows a steady rising cost until 2022. So with some stabilization afterwards. However, the stabilization rate is not enough to offset the sharp increase we experienced earlier. So even in 2024, the cost remains significantly higher than 2020, so which make it tough for businesses to stay competitive and profitable. If we move into the material prices, this graph shows that some basic materials like cement, sand, metal, bricks have changed between 2022 and 2024. These rising costs make it incredibly challenging to manage budgets and maintain the affordability for construction projects. Tackling these challenges will need a focused effort to manage material costs and look into alternative construction methods as well. The major issue is the impact of high taxes. As you all know, the current tax rates are very high, particularly in VAT and import duties, which make construction more expensive at every stage, from purchasing raw materials to project completion. So also rising these rates push some businesses towards unregulated markets, which is uncontrollable with pricing. So this creates difficult circle that make things even harder for legitimate businesses in the industry. And also the next critical thing is the cash flow management. We know that contractors must pay materials and subcontractor services in front, but only recovery of those costs can be after invoicing. So this creates a significant gap. Basically, when the VAT rate goes up, and we have to tie up more funds, which puts considerable pressure on liquidity. And high bank rates also make this worse. And on top of this, the frequent changes in tax policies, especially that creates uncertainty for businesses. Another thing is that these changes often come with short notice, making it hard for us to plan effectively for the future. Consistent tax policies would reduce the administrative burden and foster a more predictable business environment. This graph, you can see the frequency of VAT rate revision from 2002 to 2024 in selected countries where we work. So you can see that standard VAT policy stability in other selected countries, like India, Kenya, Uganda. The changes revisions are minor. So Stable tax policies are essential for long-term growth and planning. They also improve investor confidence, which is critical for the construction industry. And if we looking beyond the local market, the higher VAT make us less competitive internationally. For an example, that higher VAT rates in Sri Lanka make locally produced goods more expensive than imports from countries with low VAT rates. So this is put us a disadvantage in both domestic and international markets. As a result, many construction materials for overseas projects are also sourced from other countries. So this limits the growth potential of our local industries. And you can see that this table compares standard VAT rates in other different countries. So stabilizing our tax policies would support local businesses and help us become more competitive globally and attracting more foreign investment and partnerships. And next up, we have been discussing for a long time, but VAT refunds still need to be solved. Despite ongoing discussions and proposed improvements, businesses continue to face delays and inconsistencies in refund process. So we understand that immediate refunds might not be possible under this current economic situation. However, even our concern is even the timely finalization of refund amounts would make a big difference for the businesses, because there currently needs to be a proper system to complete the refund process and finalize the refund figures. So this delay not only ties up our working capital, but also increase operational stress for businesses that are already struggling to manage cash flows. We know that RAMIS system struggles to handle the refunds effectively, and if the SSAT system is also abolished, the things could get even worse. And another thing is the identification of VAT registration. This may seem like a minor administrative task, but it has far-reaching consequences for the businesses. For an example, some suppliers issue tax invoices, but we notice that they are asset registered suppliers during the refund process, which means we can't claim the refunds and even notice it after the loan period. So this not only results in financial losses, but also undermine trust in the system. So while the IRD does provide a supply list, the main problem is that it is not updated regularly. Businesses need the accurate, up-to-date information to make informed decisions. So we think that this must be revised so businesses can rely on it to avoid these issues. Another issue is that double tax agreements or double tax treaties. This is another area where improvements could bring significant benefits to us. For an example, currently Sri Lanka has a DTA with Seychelles and India, where we operate. So, and they allow us to get tax benefits when sending money back to Sri Lanka. So these agreements not only reduce the financial burden, but also create an incentive for businesses to expand their operations internationally. So expanding such agreements with more countries would create additional opportunities for the construction sector. And another general issue is relevant to all is the complex custom tax system. Many of you may have experienced how cumbersome and time-consuming this process can be. It is overly complicated and adds unnecessary business cost. This discourages local and international companies from engaging in construction projects involving importing materials or exporting services. So we wish for a simpler or more straightforward standardized system to reduce cost and make it easy to export construction services and access lower cost level local markets. And so streamlining custom taxes would save time and money and encourage more businesses to enter the market and fostering the competition and innovation. Finally, I want to address few other challenges related to export of construction services. These challenges may not always make headline but have a significant impact on the day-to-day operations of construction companies. First, there is a difficulty in sending machinery and equipment and bring back after the overseas project. So currently there is no proper way to handle it and incurring an additional tax burden at the end of the project. So we need streamlined process for sending machinery to overseas projects and returning it once the work is completed. And another issue is paying salaries in USD for employees work for overseas project based in Sri Lanka. While this might seem straightforward, current restrictions make it a challenge. So we believe the permission should be granted, especially if the company earns in foreign currency. So doing so, will encourage employees who directly support the expanding export of services and help retain talent within the industry. So fixing these issues would make it easier to export of construction services and encourage growth in the sector. And in conclusion, the construction industry faces many challenges, including escalating costs, complex structures, and global competition. So together we can find solution or better way to build a stronger and more sustainable future for our industry. By working hand with policymakers, industry leaders, and other stakeholders, we can overcome these hurdles and unlock the industry's full potential. Thank you all for your time and attention.
Thank you very much, Ms. Priyanti, for that informative session. She rightly pointed out the taxes affecting the construction industry and export of construction services. Next, ladies and gentlemen, to conduct the next session on tax implications on construction industry and real estate development, please join me in welcoming Ms. S.I. Asanti, Commissioner, Tax Policy, the Inland Revenue Department of Sri Lanka. Let me first introduce her to you. Ms. S. Iesha Asanti has extensive experience in tax administration and policy, holding various high-ranking positions within the field. She serves as the Commissioner of the Tax Policy and Legislation Unit, where she plays a vital role in shaping and implementing tax policies. From 2020 to 2024, she held multiple key roles, including Commissioner of the Human Resource Development Unit and Commissioner of Upper Corporate Unit 5. Earlier, between 2014 and 2020, she served as Senior Deputy Commissioner and Deputy Commissioner in the Tax Policy and Legislation Unit, contributing significantly to tax reform and governance. Ms. Iesha holds a master's degree in public policy and taxation from Yokohama National University, Japan. Additionally, she earned a postgraduate diploma in information technology and a BCom special degree both from the University of Kelaniya. Her expertise in public policy, taxation, and organizational development, combined with her educational qualifications, positions her as a leader dedicated to advancing tax policy and governance frameworks. Today, she will discuss about tax implications on construction industry and real estate development. Ms. Asanti, the stage is yours.
Good evening all. Thank you for the introduction. Let me start my presentation. I'll be discussing this presentation, first of all, the general provisions applicable for the VAT, then the important facts applicable for construction and the real estate development. After that, I will explain little bit provisions applicable for the SSEL and Inland Revenue Act. First of all, I will explain how person should be registered for the VAT. Every person who carries on taxable activity should be registered for the VAT if the taxable supply exceeds the threshold stated in the Section 10 of the VAT Act. And voluntary can be registered under the Section 12 of the Act. How this registration can be proceed? Person should be submitted application with the relevant documentation to the registration unit or the regional office, or by e-service can be registered through our web portal. However, the SVAT registration can be taken only from the head office. After registration, registration certificate will be issued for the person containing that registered person name, address, registration number, nature of business, and other relevant information. Then what are the obligations of a registered person? This registered person should display the certificate of registration at a clear, visible place of business. And that person should issue tax invoices for the other registered persons and keep accounts as per the regulations of VAT Act. And pay the
presentation is not shared to the Zoom.
and furnish the returns and pay the due payments on the due dates, as well as if there is any change of the name, address, or nature of business or ownership of the taxpayer, it should be informed to the Department of Inland Revenue without any delay. Then I will speak about the tax invoices. After making taxable supply, after making the taxable supply within 28 days, the tax invoice should be issued. These invoices can be issued on electronic form if that person, but prior to issue electronic form invoices, that person should take approval from the Commissioner General. So if any person issues e-invoices, this criteria should be fulfilled. All the characters specified in the section 20, it means that invoice should be contain the registered person name, PIN number, address, that things should be fulfilled. And the original invoice should not be repeatedly be printable by the recipient. That invoice should be uniquely issued and must be able to produce hard copy to the Inland Revenue officers if they are requested. These contents should be brought to the notice of the recipient before issuing the e-invoices. And in the RAMIS system, then one person's output will be matched with the other person's input. There are so many issues due to these unmatched invoices. These tax invoices will be unmatched due to some reasons. I have here mentioned two reasons. Minor mistakes of the invoice number. Maybe omit of some part, maybe some symbol error, the comma or the full stop, that thing also make difference this tax invoices. Other reason is long numeric invoice numbers convert to scientific numbers in Excel. That reason also cause for the unmatch. Therefore, if there is unmatch, then that sometimes that input tax credit won't be allowed by the department. Therefore, it is proposed to enabling the Commissioner General to specify the format of the invoice and the specific numbering system for the invoice. It is proposed to amend, proposed to include in the next amendment. Then the record keeping, then all the registered taxpayers should keep sufficient records. We have issued gazette notification with several gazette notification with regard this record keeping, and as per guidance, all the taxpayers should keep records for all the supplies such as liable, deemed or exempt, excluded. For all the supplies, they have to keep the records. And this original document should preserve at least 5 years in the form of that originate. Then the record keeping for VAT, it can be done for two bases, invoice basis or payment basis. Invoice basis is the accrual basis. Normally, as per the accounting standards, accounts should be prepared on accrual basis, as well as for the VAT purpose also, that accrual basis should be applied. And there is that for the VAT, there is a provision for the time of supply, which is section 4 of the VAT Act. So that time of supply will be applicable for the accrual basis. Then the payment basis means the cash basis. Before accounting for the cash basis, all the taxpayers should take the approval from the Commissioner General. Then if the cash basis approval is taken, then the output is declared in the taxable period in which the payment is received. Then if the payment basis is applied, then tax invoice should be issued at the time of payment is received. Then I will explain about the time of supply. As per the VAT Act, it mentioned for the services, time of supply is the earliest of provision of service or payment is due or received for the rendered or future received or service payments is received for the services rendered or for future services. It means at the time of payment received, it should be a time of supply. A payment is due for the services rendered or future services. Even though payment is not received, at the time, if it is due, at that time also, time of supply, the last condition is an invoice is issued in respect of the services rendered. So there is another condition. If the invoice is issued within 10 days of the supply of service, then that the time of supply would be the invoice date. And in the provision, it is mentioned that, as I mentioned earlier, cash basis approval. So if any person takes the approval from the Commissioner General for the cash basis, then his time of supply would be the payment is received. And another condition is applicable for the periodical payments. When the payment is due or when the payment is received, that time would be time of supply. When the advance payment is received, at the time of advance payment is received, it will be the time of supply, as I explained earlier. So if the advance payment is received prior to 1st January 2024, the rate was 15%. So that 15% will be applicable for that advance payment. Yeah, I have given a simple example. I think It is not that much difficult one, so I skip this one. It mentioned that if the progress payment received after January, then the new VAT rate 18% applicable. Then every taxable person should make payments on time. Due date for the payment is on or before the 20th day of the subsequent month. Payment can be done for the Bank of Ceylon or online platform. If there is if the payment is not paid on due date, penalty will be charged. Then for the first month, 10% penalty will be charged on the due amount. If that default is continuous, then from the second month, 2% penalty will be charged for the month or part of the month. Maximum penalty is 100%. With the return, every registered person should submit the schedules. There are 7 schedules applicable for the input and output. The registered person should provide these schedules correctly. Otherwise, this return won't be fed to the remise system. Then the significant amendments made to the with effect from 1st January 2024. As Mr. Suresh also explained these things, VAT rate was changed, removal of certain exemptions and amendment to the threshold. So VAT rate was increased to 18%. Most of the exemptions were removed earlier prior to 31st December 2023. Part 2 of the first schedule was applicable for the exemption. There are so many exemptions, and most of the exemptions was removed. A new exemption schedule was introduced with effect from 1st January 2024. That is part 3 of the first schedule. Then the registration threshold also reduced. It was reduced to 50 million for a taxable period or 60 million per annum. Then I will discuss about little bit about important facts applicable for the construction industry. Then the construction industry, as I explained earlier, time of supply. Construction industry is actually differ from other industries. Their payments are going under the progress payment. So at which a claim for a progress payment is made, based on the completion of the work, that amount will be considered as that time will be considered as a time of supply. And a contractor should issue tax invoices as agreed upon in respect of the progress payment. And for the retention and the advance payment, that will be charged at the time of payment is received. Then the supplies to the construction government projects. VAT payment to suppliers are settled through the vote transfers for the government projects. If any payment delays and penalty is charged, then it will be write-off. Then the suppliers are required to issue tax invoices and declare the supply in VAT return based on the time of supply. Then the deferment facility and the credit vouchers. Deferment facility is granted for the by the Director General of Custom at the time of importation, including any goods received from custom bonded area. So for this deferment, eligible exporters and persons who are registered under the section 22(7). For claim this deferment facility, every registered person should correctly declare this deferment amount. If the refund amount of the return is less than this deferment value, then the credit voucher will be issued after paying the difference of that amount. Again, this is applicable for deferment and credit vouchers. Deferment is provided for the import of plant and machinery for temporary importation and re-exported after the completion of project. For this purpose, a registration person is required to submit a schedule on imports at the time of registration, and cage 11 of the return should be filled correctly to claim the refund. Then imports under a temporary VAT certificate. Actually, this temporary VAT certificate is issued by the Commissioner General for the purpose of importation. As per the VAT, if any person imports anything to country, it should be noticed to the Commissioner General not later than 40 days of that importation. So, if that person is not registered for the VAT, and if that person is not doing a business, then we will issue temporary certificate for the purpose of importation. If anybody is registered under the section 11, that person is not entitled to claim input tax credit on this importation. Then specified project and strategic development projects. For these projects under the part 2 of first schedule, also exemptions were available. That new exemption schedule, part 3, exemptions available for the specified and strategic development projects for the supply of goods or services to any project identifier as strategic development project or specified project or development project funded through the foreign loans are exempted with effect from 1st January 2024. This is the exemption granted for the imports. This is also applicable for specified and strategic development or development projects. These exemptions also are applicable with effect from 1st January 2024. And another deferment and exemption is available for the specified project for the importation of capital goods for the temporary importation of capital goods and re-export after the completion of the project. This is a special thing. Specified and strategic development projects supplies are that consider supplies made to specified and strategic development projects are considered as an exempt supply. But there is special provision for these projects. The supplies made to these projects are considered as deemed liable supply. Therefore, whatever the input tax credits applicable for this project can be claimed and grant SVAT registration as RIP. This is the calculation of payments of supplies to a specified project. Output tax is considered as a deemed taxable supply. Then that person can claim the input tax on the import and local purchases. After that, deemed tax credit will be granted for the deemed taxable supply. Then definitely these projects will claim refund. Then the disallowable input tax. Input tax will be disallowed if that input is not connected to the taxable activity or any importation is not claimed within 24 months or any local purchase, if it is not claimed within 12 months, input will be disallowed. And then another restriction is 100% of the output tax, input tax will be allowed. If there is excess, it will be carried forward. Registration for the SVAT, there is circular for the giving instruction for the registration. For the RIS, registered identified supplier, no condition, every registered person can be registered as RIS. But for the RIP, registered identified purchaser, there is condition, there should be a more than 50% of supplies to the exporter or supplies to registered specified project or, as I explained earlier, strategic development project. Then the important facts applicable for the real estate. For the real estate, that value of supply will be computed as per the section 5, subsection 7 of section 5. It is actually special provision for the value of supply of these commercial residential apartments or commercial area. For this purpose, calculation would be the sale price of the apartment. From this, you can reduce market value of the bare land at the time of sale. Then, for value of supply is the balance amount. On this amount, tax rate should be applied. If there is improvement prior to March 31st, 1998, it can be claimed. Then the removal of exemptions. This also discussed by Mr. Suresh also. From 2016, I think time to time there was several amendments made to this residential accommodation. After 2016, rental and leasing of residential accommodation made liable. Then after that, with effect from 1st January 2023, residential accommodation, that exemption was continued, but that condominium apartments made liable with effect from 1st January 2023. Then after that, from 1st January 2024, this exemption granted for the residential accommodation was also removed. So now all the residential supply of residential accommodation, supply of condominium property, or supply of lease or rental of residential accommodation are all liable for VAT with effect from 1st January 2024. Then some provisions applicable from the SSCL. Actually, this SSCL was brought into with effects from 1st October 2022. After that, 2 amendments were made. This was applicable for the taxable person who imports any article or carries on business of manufacturing or carries on business of providing services or by nursery. So its construction is come under the carries of business of providing services. Then for this SSCL also, for the land and improvements, the VAT provision will be applicable. That value is applicable for the SSCL also, as which is I explained earlier. Then for the services, construction services, 100% of the turnover is liable for VAT. Applicable VAT, 100% turnover is liable for SSCL. The rate applicable is 2.5. This is exemptions granted for the specific and infrastructure development project. In the SSCL Act also, exemption has been granted for the importation, temporary importation of capital goods and any article imported for the imported and proved the satisfaction of the Commissioner General. Such article is imported for the temporary use in Sri Lanka for any project. And another exemption is granted any article for the use of any project approved by the Minister. Then the service exemptions also granted by considering the economic benefit of the country. So services provided to any specific project as well as the services provided by foreign consultants for the large scale infrastructure development projects have been exempted from SSCL. Then for the registration of SSCL also same threshold applicable as indicated in the value-added tax. If the aggregate turnover for a quarter, for a quarter exceed or likely to exceed 15 million, should be registered for the SCCL, or annual turnover exceeds 60 million. For the importation, no need registration with regard SCCL. Then I will explain about the Inland Revenue Act applicable provisions. This new Inland Revenue Act number 24 of 2017 made the special provision for the long-term contracts. It defined what are the long-term contracts for manufacturing, installation or construction, or in relation to each, the performance of the related services are considered as a long-term contract, and it should be more than 12-month contract period. So in this act, it is mentioned how this long-term contract income should be declared for the income tax purposes. It mentioned that contract shall be taken into account on the basis of the percentage of the contract completed during each year of assessment. Then the corporate income tax rate, this was also mentioned several times in this seminar. Previous rate is 14%, now it is 30% with effect from 1st October 2022. In 2023 amendment, there were 2 exemptions given. First one is given for the profits and authorized person carrying on business of strategic importance approved under the Port City Act. So this amendment was brought into this Inland Revenue Act after the Port City Act was passed. So this exemption was given retrospective effect with effect from 27th May 2021. Then the next exemption was granted for foreign grant-funded government projects carried out by non-resident. This will be effective with effect from 1st April 2023. These exemptions were granted in 2023. This is end of my presentation. Actually, it is a little bit technical. Maybe you get something, maybe you won't get something. It's okay. If you want to any further clarification, you can ask in the question and answer session. Thank you for your time. Thank you.
Thank you, Ms. Asanti, for enlightening us with your expertise on tax implications in construction industry and real estate development. Coming up next, ladies and gentlemen, taxes on cement industry and its implications for construction industry. To conduct the session, I encourage everyone to join me in welcoming Mr. Sandeep Hawley, Director and Country Head, Ultratech Cement Lanka Private Limited. Let me first introduce him to you. Mr. Sandeep Hawley brings over 30 years of expertise in the cement industry, specializing in business leadership and strategic management. Throughout his career, he has been instrumental in driving growth and operational excellence, particularly during his tenure at Ultratech Cement. His accomplishments include receiving the award for Outstanding Achievements in 2006, being nominated for the Distinguished Achievers category in the prestigious Chairman's Award in 2010, earning the Pride Team Award in 2016, and receiving the Chairman's Award for Exceptional Contributor in 2017. Mr. Sandeep holds a bachelor's degree in civil engineering from Amaravati University and completed postgraduate studies in business administration at Global Next University. He has also attended leadership programs at Indian School of Business, Hyderabad and Harvard Business Schools, further enhancing his strategic and managerial capabilities. Today, Mr. Sandeep will discuss on taxes on cement industry and its implications for construction industry. Over to you, Mr. Sandeep Hole.
Thank you. Good afternoon, everybody. Still, I am saying good afternoon. So, thanks to my previous 3 speakers, just after lunch, the difficult time, you took over, right? And I could see the numbers, now it is roughly 130 on Zoom, the virtual media. And Professor Ranjit is still here, right? Good. Thank you. Continue. So hybrid things will have its own repercussions. So this is a discovery for me that laser fiber doesn't work on smart. I did not. It is working there, it is not working here. We are learning all the time. So sorry for the inconvenience. I get extra 3 minutes because of this technical delay. So let me establish my as well as my company's credential, because I am going to talk here about a subject which is slightly in a different way. So we belong to Ultratech Cement. You can see our posters and banners. We belong to an organization which was originated in 1856 when Mahatma Gandhi from India started freedom movement. That time this organization started by supporting the freedom movement of India. So that is the history of this organization. Today we are $66 billion US dollar in turnover. Our market cap is $113 billion. We are working across all the 6 continents, North and South America to Australia, everywhere. My colleagues who are sitting here, we are 187,000 employees, belongs to 100 nationalities. So for the namesake, it is Indian national, Indian company, basically a global conglomerate. And our customer base is almost 300 million, which is more than the population of United States of America. So that is our size in terms of this thing. Globally, not in this country or that country. Globally, we are leader, number 1 or number 2 or number 3. You can see in case of aluminium, we are number 1 in 2 segments of aluminium. Carbon black, anything black you see, car you drive, tire you use. So number 2 in carbon black globally. I think every third car in this world is on Aditya Birla Carbon's production. Viscous stable fiber, something related to this garments. We are number 2 in world. In cement, your humble cement partner called Ultratech Cement is number 3. I can see Chandana also there, good. From INSEE, good. Number 3, insulator. I have got a habit of talking, I can't help. I need to keep you alive, right, in the post-done session. In insulator, we have got number 3 position worldwide. In cement, I will not go for further this thing, but largest RMC player, almost 320 something plants, 316 ready-mix plant all across India. Grey cement, more than 60 plants all across this thing. We are working in UAE, Bahrain, Sri Lanka, many places, and so on. In Sri Lanka, our history has been for 25 years. And I am proud, I am thankful to companies like Sanken, Mr. Ranjit. They were involved in the construction of our plant, if I remember correctly, if I am told correctly. Many companies here. So this is one of the, and this company has got one of the tallest industrial structure in Sri Lanka, 56 meter of bucket elevator structure. We got 4 silo, almost 37 meter in height, 16 meter in diameter. So it's a huge structure, not only a bulk terminal, it's a huge industrial structure. It's a BOI registered company. We have got pan-India presence. We have got a big vessel hired from Helis, a Sri Lankan company with a Sri Lankan flag, and so on. Many projects in Sri Lanka. I think Suresh spoke. You spoke about industrial construction. So any big project of mega status in Sri Lanka, almost second or maybe almost every project except few, they have been using our cement, whether it is in expressway segment or maybe hotel segment, $1.2 billion Cinnamon Life or ITC or Shangri-La, Central Expressway, reservoir like Morgaganda, Kaluganga, Kelopati Outer Expressway, railway project, airport expansion project, Japani customer, all those things. Possibly they have been using this type of industrial structure, they have been using our cement with a preference, with a priority, because it is coming from the same source. You can see here it is coming from the same source. Because of that reason, even the standard deviation is very low, the strength is very high. But when you get raw material from various places, so there could be an issue. Possibly that is the reason, not the price. That is the reason for quality we are giving preference. Let me touch upon with brief introduction by establishing credential. Let me touch upon few things which are related to taxes. We are a responsible stakeholder of construction industry. We are one of the cement companies. So I will be representing all with some changes here and there. So, as Mr. Nisanka said, we are construction industry, 8 to 10% of GDP. Important, yes, very important. Now we can talk about segments and this thing, but as an industry as a whole, almost $80 billion GDP. From that maybe 8 to 10%, $6 to $8 billion. Out of that, roughly 10% is cement. Without cement, this $6 to $8 billion cannot come. So cement is important. Industry is important. This industry is very, very highly capital intensive. It's not today's thing and tomorrow's thing. Once you put up a project, it has to give at least for 5 to 10 years of complete cycle. There are 3 types of production process, and I will come to this thing, but please have a look here. This is integrated unit called local production. Second thing is grinding unit. We are importing clinker, grinded here, and third we are importing bulk cement. We are packing here. What I showed you. There is one more category, imported bag cement, that also will be there, but I am covering basically industrial things. Now what will happen when you want to go for it's okay, I can manage. Right. When we go for almost 1.5 million ton, I took the same capacity to give you a size of this thing. So 1.5 million ton per annum. So you require roughly 3 to 4 years of, that is the way it is going. We require 3 to 4 years of period to make a plant, 2 to 3 years for grinding unit, and 2 years roughly for import this bulk terminal. When somebody go for an integrated unit, they have to go for mining and so many things. So nobody goes for 1.5 million ton, they go for minimum 3 million ton. $300 million is the investment. Except one plant from our industry colleague, which is in Puttalam, no plant is having local production. Then we have got a grinding unit, basically which require roughly $50 to $60 million. Replacement value of our structure, which is in Peliagoda, Kelania, next to the airport expressway, roughly $30 million. Now, plant is one thing. What about the supply chain? So when you see you require, now let me just touch upon one particular period, 2021-22. We are from construction industry, and there was a shortage of cement, and suddenly we started getting importance. We are going to you, but then you are coming to us, right? That was a very golden period for our type of companies. Suddenly, we are getting calls from government side and everywhere, increase cement, increase supply. Plants are there, vessels are not there. Clinker is not there, cement is not there, but we could supply 1.4 million ton because we have dedicated 3 vessels. Now here comes the importance of supply chain. You should have your own plant. You should have, in case of this, vessel is not required, but you can manage. Here it is preferred, you can manage. Here it is compulsory. And import dependence, the first thing, yes, it is a complete local production. So no import dependence, but in case of clinker and the next 2 categories, 100% import dependence, except some few percentage here and there. So let us see the world perspective, world scenario in Sri Lanka. Now cement is not to be traded. Cement is basically a local production and local, I will say, sort of trading process. Because logistic is almost 30%, logistic cost, and energy cost is roughly 30%. In a big country like India, Pakistan, America, whatever you take the name, so there they will have almost self-sufficiency in local production because they have got limestone, they have got everything available. And that is the reason you can see the global production against 7 million of production in Sri Lanka, almost 86% is coming through import of cement or clinker. But in case of globe, against 4,100, it is only 106 million. I know. So only because of this 2.5%. No, steel. In case of steel, almost you can say 24% is global trading. But in case of cement, only 2.6%. Mr. Kapila, okay for Zoom? Right? And you can see global cement business was around 2020, it was around $400 billion. Out of that, bulk cement movement was almost $15 billion. Clinker movement was around 4.7. So both the modes of, I will say, distinct moves. This is a production process. This is a complete production process. So right from limestone mining to raw mill grind to CF silo, control flow silo to mix. These are huge structures, 60-70 meter tall. XRA machine, preheater, kiln, then we make clinker. Clinker is then transported. So this entire thing will be called integrated unit. But when you are grinding it along with packing, it will be grinding unit. When you say only packing, it will be bulk. So this is basically the difference between 3 production model. In Sri Lanka, we take this is photograph of my own plant in Gujarat, India. We are loading cement from that place. It comes 2 days of loading of 21,000 ton of vessel. It comes to Colombo within 4 days. Vessel is from Heli's shipping, Sri Lanka shipping with Sri Lankan flag. It is 4 days, 2 days of loading at Gujarat, 4 days of sailing, 2 days of unloading at Colombo port to plant with the help of almost 80 Bowser on long-term contract, everything on long-term contract. and then we are ready to go with almost 32,000 ton of cement at one time, at one point of time. So now here is the topic of tax, import duty. After this background, we can see the difference between two types of thing is slight, but you see the tax differentiation between two types. The local realization in case of bulk cement import is 10%, in case of grinding roughly 20%, difference is 10%, but somebody is very good in mathematics, he can argue that why 20 over 10, so I wrote 50% also. Let me go this side of the screen. So prior difference 10% and 7.5%. I can see IRD and KPMG this side, so I came on this side just for the making it interesting. So 10% and 7.5%. So 2.5% is this difference. But you see the cess, which is a temporary thing. A budget notification which comes on, any time. So those type of things will be 4 rupees on bulk cement and 0 on clinker as of now. So 4, which is basically 400% of this thing. So 2.5% additional, 4 rupees, 400% additional here. And not only clinker, then we go for other raw material like gypsum, fly ash, slag, etc. They don't have any cess. So this is basically an issue. How it is coming, I will tell you. Up to October 22, there was nothing called difference more than 2 rupees. Within a month, it became 2.5. Within another month or two, it became 3. Within another month or two, it became 4. So 2 to 4 in September, some reduction, it again becomes 0. Again is a difference of 4 rupees. So 4 rupees means almost we can say 200 rupees a bag. Now, there is always a sort of, I will say, understanding. There is an understanding that is a local product, local validation. So let us see. We already have a bulk packing. We already have a dedicated vessel. For the information, Sri Lanka Shipping CEO spoke. He told me sometime back, $25 to $30 million is the cost of this vessel. We have got 3. Every day we are paying $16,000 as a long-term charter for 15 years, and then $3,000 to $4,000 for bunker, IOC, LMS, whatever parties are there. So almost we can say $20,000 per day outflow, whether we do cement business or don't do, it is there. Then we have got transporter, vendor, all those things are there, 7, 80, 100, all that. Laboratory, NABL, ISO, all the things are in place. What will I do? If suppose our investment value is 30 million right now, I am not taking this 75 million here, which is for vessel, but although there is an expense for a company, I am not taking that. And that is the reason actually we are able to supply during shortage time. If shortage time these vessels were not there, Sri Lanka would have got at least 1 million ton grace of cement out of 6 million ton. Now, if I want to put up a grinding unit, I have to just add this storage, which is there in Hambantota some places. This type of storage, and we have to put up a grinding unit like this. So additional investment will be roughly $30 million. What will country gain? Let us see. Industry will gain. Manpower. Right now we already have everything, distribution, whatever packing are there. So we have got 200 people. Possibly we have to go for 50 more employees, not more than that. Our power consumption today is 1.5 kilowatt per ton because cement is already made outside some other country coming here. But if I grind it here, I need to spend 30 kilowatt per hour. Now whether electricity use is good for industry or not, different debate. But we have to go for 30 kilowatt per hour of electricity. Now benefit to the market, Sri Lanka market size, we already have about 18 to 20% market share. By just converting that 1.5 BT to GU, can I give anything additional to market? No. Then somebody can say what is the price to customer? So price will be depending upon various factors, not only on tax, not only on type of the production. So economic variables, demand, supply, so same situation. So question is, what is the gain for construction industry, our customer side? So for that 4 rupees or whatever things we are spending extra, or we are giving extra benefit to revenue. Now revenue also let us see. This is the, I will say the first half of FY22. These are the quantities, 600,000 ton roughly, because nobody get exact figure of the cement industry, but we are taking some judgment. So there is a reason I put that about mark. So 1.2 million, 1.6 million, whatever quantity. So industry total demand 2022 first half came down by 3.5 million to 2.3 million roughly, 34% reduction, 34% reduction. You see, local production, genuinely local production, is not getting affected because whatever Uttalam plant can give, that will continue to give. So no change in that status. So 0% degrowth. Grinding unit, 0% maintained. In case of bulk cement import, it came down by almost 70%, 72% reduction. So one industry got hit so much, 1, 2, 3, 4 plants are almost on the verge of, they are closed. Only Ultratech is there because of some reason. Possibly maybe question answer session we can discuss. So what I am trying to say, if suppose revenues are going on this particular side, this bulk cement, especially on 4 rupees, when volumes and sales is coming down, business is coming down, revenue will be there or will not be? So there is a question, you have to think. So, and then somebody can also say that during that time of shortage, industry capacity was not there, we added. You see, in that period, peak time, 10.6 million ton was the capacity size, but we were not able to supply even 7 million ton. The reason is, this production is not local, it is depending upon supply chain and depending upon other supplies. So, what could be the implication for construction industry? I think the difficult part is over. So let me just cover this thing in a normal way. So cement shortage period in 2020-21, can cement industry serve with over-reliance of 1 or 2 model? Because once you remove one model which was created over 20 years or 30 years, one will send back one company or one plant or one model from here, will they come back? And tomorrow, if there is a shortage, can we survive in that situation? We have to think. These are questions. Second thing, again, the part of industry and this thing, equitable and consistent duty structure is necessary for all. So if we are ready to pay duty, everybody has to pay duty. If nobody is paying duty, we should not pay duty. That is basically equitable and fair. And government's revenue can be sustainable only if it is equitable, because we saw the bulk imports are coming down. When business will not be there, revenue will not be there. So what will happen? Possibly 1 or 2 companies already not working, 1 or 2 companies more will not work, our plant will not work. Can we expect more investment in the industry in time to come? Another question. And suppose, hypothetically, it is not there, only 2-3 plants are there. In that case, healthy competition may be hampered, may be compromised. When healthy competition is compromised, possibly it may lead to, we know what can happen. So today, basically there is a competition. Because of that reason, there is a quality, you saw the graph, consistent quality, people are using the cement, services, business practices. So what is our view in the interest of construction industry? Let us allow healthy competition. Let us allow all the segment of industry, small, no, I don't want to take the example of Trisha to the van and car, everything, Mercedes to BMW. Let people decide what they want. Let there be healthy competition in a way that we compete in market through our quality services, not through cess, not through taxes. So it is, and then government revenue, we already discussed. So I think these are the things which I wanted to share. And I would like to close here. I rest my case in front of you all. Thank you.
Thank you very much, Mrs. Sandeep Holle, for sharing your valuable insights. Mr. Holle stresses the importance of taxes on the cement industry and its implications for the construction industry. I'm honored to once again remind you that Ultratech Cement Lanka Private Limited is our main sponsor today, and China Harbour Engineering Company Limited is our co-sponsor for the event. Ladies and gentlemen, to greatly acknowledge our sponsors, I would like to draw all of your attention to the screen for a few minutes.
A vision becomes a milestone when it helps make our lives richer with love and laughter. When it helps make a cleaner, smarter, and a more beautiful planet. So that you can set off on joyous new journeys and adventures. Building stronger bonds and bridging impossible distances, which take you from the ever new to the forever beautiful. Opening up vistas and windows to a vibrant new world. A vision becomes a milestone when it touches millions of lives every single day. Aditya Birla Group, big in your life.
Ambitious kings and skilled craftsmen built vast kingdoms that are etched in our history. These structures were built with enduring materials and envisioned by brilliant engineers. This heritage has found its way into our future with Ultratech Cement. No other cement can claim to have the highest 28-day compressive strength, chosen by the very best engineers. Ultratech Cement stands the test of time, stronger with time.
Established in 1980, China Harbour Engineering Company Limited, CHEC, is one of the pioneering enterprises in China to conduct international engineering businesses. As an overseas platform of China Communications Construction Company Limited, CCCC, a global Fortune 500 company, CHEC explores overseas markets on behalf of the CCCC and has established branches in more than 90 countries around the world, conducting businesses in over 100 countries and regions. As an international top-tier engineering contractor, investment operator, urban developer, and ecological manager, CHEC adheres to its philosophy, value orientation, and commits itself to upgrading a platform plus industrial leading strategy. CHEC enjoys complete industrial chain advantages and boasts strong resource integration capabilities in such fields as ports, buildings, roads and bridges, rails, comprehensive urban developments, environmental protection, pipe networks, and green power. It has mastered core technologies such as offshore deep water ports, offshore islands, long-span bridges, gauntleted track railways, and high-rise buildings, and is able to provide its global clients with packaged solutions and integrated services of investment and financing, consulting and planning, design and construction, and management and operation. Moreover, it has successfully promoted a large number of high-quality projects around the world. CHEC is a world-leading service provider of the whole value chain of ports. It has built a number of large-scale ports globally. These include Shanghai Yangshan Port, the world's largest offshore deep water port and largest container port, Doha New Port in Qatar, a dug-in port with the longest frontage that was built at one time in the history of port construction in the world, Abidjan Port in Côte d'Ivoire, the largest port in West Africa, and Ashdod Port, a vital gateway port of Israel. The third runway of the Hong Kong International Airport, and has provided a convenient, environmentally friendly, reliable, and brand new solution to the formation of global offshore land. Building construction is also one of the main businesses of China Harbor. CHEC has a leading edge in super high-rise buildings, prefabricated buildings, stadium construction, and other fields. For instance, the new Lisboa Hotel in Macau, constructed by CHEC, has become a landmark building of Macau. The Hambantota International Cricket Stadium in Sri Lanka, constructed by CHEC, successfully hosted the 2011 Cricket World Cup. CHEC will contribute to building a community with a shared future for mankind.
With that, ladies and gentlemen, it's time for us to continue the seminar. Following the agenda, next we have the most awaited session, the panel discussion, followed by the Q&A segment. To conduct the panel discussion, I'm excited to invite and hand over the panel discussion to moderator, Mr. S. Sumilan, Chartered Accountant, Treasurer, Condominium Developers Association of Sri Lanka. First, let me introduce him to you. Mr. Thumilan Sivaraja is an accomplished finance and corporate professional holding multiple prestigious qualifications including Associate Chartered Accountant, Association of Chartered Certified Accountants, member of the Chartered Institute of Securities and Investment, and Certified Practicing Accountant, Australia. As the founder and group chairman CEO of the Blue Ocean Group of Companies, Mr. Thumilan has demonstrated exceptional leadership in building a diversified business portfolio. His ventures span real estate development, property management, construction, and education, driving significant growth and innovation in these industries. Mr. Thumilan's expertise include strategic business management, financial and investment planning, and corporate governance. Today, he will moderate the panel discussion. I would like to invite Mr. S. Thumilan, Chartered Accountant, Treasurer, Condominium Developers Association of Sri Lanka, to the stage. Also, please join me in welcoming the panelist, Mr. Suresh Pereira, Principal, Tax and Regulatory, KPMG Sri Lanka, Ms. KGC Priyanti Manike, Assistant General Manager, Finance, Sunken Overseas Private Limited, Ms. S.I. Asanti, Commissioner, Tax Policy, the Inland Revenue Department of Sri Lanka, and also Mr. Sandeep Hole, Director and Country Head, Ultratech Cement Lanka Private Limited. Over to you, Mr. Thumilan.
Thank you for the introduction. Good evening, everybody. And we should thanks to CCI to arrange a very hot topic, tax issues concerning to the construction industry. Just let me discuss the issue first. We had a nice presentation from Suresh and also Asanti from the tax laws and the legislation, and Priyanti and Sandeep regarding the cement industry. We understand from the presentation there are many laws changes and the rates changes and the rates are jacked up because of IMF. Basically, we look like one side, we married to IMF anyhow, and whether the laws and their fiscal policies are going to be practical to sustain the industry or survival of the industry. If you look at one side, as everyone knows, construction industry, as Mr. Nisanga Vijayaratnam DG said, we are struggling to survive. No projects, due to the government restriction of fund, we have been suspended, all the projects suddenly, not systematically. Therefore, we are forced to fall into a great financial and cash flow constraint. Another side, one side is tax has been drastically increased. Other side, the bank interest, bank charges, everything is drastically shoot up from 10% interest rate to 30% interest rate, and exchange rates almost 140 rupees to 320 rupees. Today morning also we had a discussion in the finance ministry regarding the Parata law extension, how they will going to tackle the economic crisis situation. We started with the food crisis. Finally, we end up with the economic crisis. So, construction industry, they have a wrong perception in the industry because of COVID we affected. But the construction industry and the real estate industry was affected. 2000, condominium is affected 2017 onward. When the governor say there is a bubble going to come to the real estate industry, every foreigner started stopping buying apartment in Sri Lanka. They got panic situation. Then the central bank informed to the banks, don't lend it to the construction industry and real estate industry because which is treated as a high risk industry. So on that aspect, we will look at how we can sustain this industry without fail or shut down. If we fail, the policies, if fails, you know, most of the foreign companies are migrating to overseas, especially it has already happened to garment industry. They went Bangladesh, Vietnam, like that they went. But today, our construction industry is saving lot of foreign currency by doing project ourselves, including road project, bridges, infrastructure development. Those days, those projects handled by foreign companies. Today, our architects, professional QS, all are capable of handling all complicated construction in Sri Lanka itself. So therefore, we appreciate, we will question over to the audience how they can answer to your question. Thank you very much. This question over to you, please. Dr. Rohan is asking for. We can.
Yeah. Hi, ma'am, Miss Asanti. I have two questions for you. I am Dr. Rohan Karnaratne. One is regarding SSCL. Now, SSCL, you all calculate for the total turnover, and you all send us red invoices after the end of the year. But the thing is, out of our total turnover, most of our projects are not liable for SSCL. So I have seen certain projects like foreign funded projects or sports complexes and things like that. Certain things are to be avoided. But you all calculate the whole thing and send red notices to our contractors. And the worst thing you all do is you all won't issue the VAT certificate for our contractors to collect the payments now. Because the last 2 months of the year, only contractors are getting the government payment. So they can't collect the payments also even to pay you all. So this is a very serious issue which you should look at. That's number one. I think number two also I will tell you, then I can release the mic. Number two is again regarding the VAT. Some projects, government projects, even for the advance, we don't get the VAT. Some projects, they delay the VAT payment and they delay about 2-3 months and pay the VAT payment later. But you all won't consider any of those things. You put all the penalties and calculate do your own calculation and send it to our contractors, and maybe you all seize the bank accounts. So that is a very serious issue too. Finally, I have one more point. IRD has quoted one of my paper articles saying that out of 250 billion payments to the contractors, 200 billion been paid. That is true. But ma'am, it is 2-3 years old payments. By the time the contractors are getting those payments, their bank accounts are being overdrawn, they are lost on the project, and they are completely lost. So they are showing my paper article and say, contractor, see, the government has paid you all, therefore you all pay. So it's very, very, very wrong. So please address these three things with RD officers. Thank you very much. Okay?
Yes, thank you for your interesting questions. Actually, all the questions are related to the practical issues. Yeah, that first question with regard the SSCL, if that service is exempted, then you are not liable for the SSCL. Then actually no need to register for the SSCL. So you can easily resolve that issue by deactivating the SSCL registration. For the second one, you raised that one with regard the VAT certificate. Basically, VAT certificate is issued by the, it's a computer generated certificate. If there is any delay, that person come to the department and request for the certificate. I don't know whether there is any delay of issuing certificate. It's issued by the RAMI system. Then the third question you raised about the payment delay of the construction. Actually, we have to work on the legal provisions, no? Even though you didn't receive VAT portion on your advance amount, as I explained in the presentation, based on the time of supply, at the time of receiving the advance payment, you have to pay the VAT. So if we can find that you have received the advance payment, even though you don't receive the VAT portion on that, we have to assess on that. So I think based on the legal provisions, we have to act without amending the law. We cannot evade that things. Thank you.
Sashanti, that's a very good question. Actually, what is happening practically, some of the government institutions are asking, they are paying advance payment with the VAT, where we need to give a performance bond also for the VAT component also from the company. VAT component also should be included in the performance bond. When the project is stopped for their reason, due to fund restriction or whatever, we have already paid the VAT component to the inland revenue. But what happening when they claim the bond, they are claiming with the VAT. So this is a very practical issue many of our contractors are facing. because this is not a consistent rule. Some government institution are asking with the VAT, some other institutions are not asking the VAT. I think example like ADB also I made aware today, they are asking with the VAT. So actually the contractor giving bank performance bond or advance bond for the VAT, advance bond for the VAT component also. But actually we are a collecting agent only on behalf of inland revenue. So they should not ask bond for the VAT component. That is our view.
Correct. If there is no supply, we won't charge VAT.
Because the VAT situation, as you said, some agencies ask the bonds with VAT. When the bond is encashed, that amount goes into the bank. When the bank gets that money, are we supposed to set off VAT on that or not?
If there is any liability, it means for the construction project, if there is any liability, then from the bond you have to set off that liability, means.
Yeah, when the bond is encashed, money comes to the bank.
Yeah.
And then if it is with VAT, of course fine. If it is not with VAT, if they recognize that as an income, the VAT is set off from that. Because VAT, if the bond encashment is just reimbursement, yes, then we can, not account the VAT. Otherwise, we'll have to take the bond with VAT.
That question is not clear. Actually, VAT is charged only for the taxable supply.
Yeah,
if the bond is taxable, that for the construction contract, I think bond is not a taxable supply.
Then of course somebody will have to get a clear directive.
Asandi, it is very unfortunately, I'll make it very simple. We'll say 100 million now bid is over, they elected, then award letter is given. Within a short period, we have to give the performance bond and advance bond to receive the advance. We'll say the contract value is 100 million. Then VAT, they are charging 18%. That means another 18 million. So the contractor, they are asking by the institution to pay, to give an advance bond, not for 100 million, 118 million. 118 million. Then what we are doing is, when the money received, we are paying 18 million to the inland revenue. We'll say some other reason, whatever the reason, the project cannot continue. So then they are sending the bond to the bank, unconditional bond to the bank, claiming the 118 million. So this is the practical issue.
If that VAT is paid to the Commissioner General, then after that it cannot be, it can be claimed only for the that relevant person as an input. Otherwise that amount won't be refunded.
Yeah, this is a different type of question I'm producing, not a question what's happening. See, if you take the construction cost in the Asian region or the South Asian region, we are the highest. Right? So when it comes to foreign direct investment, right, they think why should we pay so much of extra money and come and invest in Sri Lanka when there are opportunities in other places. So which has actually reduced the possibility, option of foreign direct investment coming into Sri Lanka. So one of the reasons or one of the factors that the construction cost is going up is because, as you know, fair component of the construction industry items are imported. So there's huge tax on that. So that is one of the reasons that the cost is so high. I think one of the presentations we saw that, right? So if you want, and as Mr. Engineer Nisanka said, 20% of our population is surviving on this industry, right? So when the industry goes down, where they are going to have their bread and butter? So I think this is a national issue. So I think we need to look at it in a positive manner, how to get out of this. Thank you.
Actually, good question, Mr. Jayanda, our President. I will add to that one. Actually speaking, now even not only construction cost is highest in the region, because of the construction cost in the highest in this region, Even real estate, apartments are becoming extremely expensive in the region. Now, example, now we have charged VAT also, madam. Ashanti. So what is happening? Blindly we are charging 18% VAT to the industry. But the real estate industry, we are not only paying VAT, we are paying stamp duty when we purchase the land 4%. Then so many VAT somewhere middle. Then as Suresh said, somewhere are going to dance the rent also. Then we are having another dance when they sell it also, capital gain tax. Not before selling, they transfer the deed also. Mr. Ashanti, we are paying stamp duty on the market valuation, not even purchase valuation, market valuation by Western stamp duty. In that, so you see, already 4% land and again property value 4% stamp duty. Again they are putting 18% VAT on the apartment. Nobody going to buy. We can implement any policy, but we have to see whether these policies are par with the region. Bangkok real estate development is doing, and India is our direct competitor. So when the investor coming to Sri Lanka, whether they is affordable, it is returns are acceptable like that. And as Ms. Suresh said, one more thing is from KPMG. When we start a project, it's not going to be over within 1 year or 2 years. These high-rise buildings are taking 3-4 years. Now our investors are asking, while coming to overseas and lying come to Sri Lanka, buy the property. Now when we bought over the property at the time of transferring the deed, when we trying to rent it out, your government saying we are going to introduce a tax on the rent. So what is our real estate people position?
Yes, with this our country difficulties, most of the tax burden actually it passed to the all the people of the country, not only for companies but also for individuals. For income tax, it's only 100,000 is exempted per month. Others, then the tax rates, maximum tax rate is 36%. Burden has gone for everybody, not for the construction, not only for the construction company. And I think if we overcome these issues, this crisis, then government will take the decision to grant concessions, and IMF also will agree with the finance minister to grant concessions. Otherwise, even though the government officials want to grant these concessions, IMF also, they won't allow to amend these laws until the country is stable. That's the problem. So everybody is suffering, not only the companies. Everybody is suffering due to this condition.
I think they might have many questions.
Just one thing that recently I saw on a research done on the Asian region or the developing countries. Sri Lanka, there's a norm, counting the population, so many taxpayers, and we are very low. 1/4 of the norm that has to be paying taxes, we have only 1/4 paying. So that might be the reason. One of the main reasons, I think, the number of taxpayers are very low compared to the population. I think that is one of the main reasons. To add to that, recently I met the High Commissioner of India, and he, in a small chat, he said, when they digitalized the entire process in India, within 2 years, the number of taxpayers became double. And he said the Indian government has no problem with money there. You know. So I think that's one area that we should be looking at.
Yes, we have taken certain steps for that solution. Actually, we have announced that TIN should be taken everybody whose age is more than 18. And now we have issued gazette notification for the data sharing with financial and banking institutions, land registry, motor registrar, with everybody. Then all the informations come to all the informations come to the department, then we can increase the tax files. Other than now, for this year of assessment 23-24 also, we have included the interest income for the income tax return. It's populate automatically. I think in future we can achieve that target, increase of tax file and pay more taxes, collect more taxes from everybody equally.
We'll put one question to Mr. Suresh Perera. Now see this 100,000 payee tax. The public is feeling we have through our hard free education, educated engineers and the doctors and the accountants and all that. Then finally when this 1,000 tax ceiling come, most of the people migrated to other countries. So even engineering, our field. So we feel very high skill shortage in the market. So UK, it is the geopolitics we are done through Sri Lanka, because UK has captured all our educated doctors. Now we look at a small money. In future, we may have to go to treatment also for India, like earlier, Apollo Hospital. So don't you think this tax system has to manage social disasters as well when you implement a policy?
So you're asking about the tax policy. Okay, so let's look at it. As far as the individuals are concerned, I think what individuals are bothered about is the income tax. That's the main tax. So what we have to look at is whether income tax system in Sri Lanka is equitable. Right? So the question is, before 2019, the tax-free threshold or it's a relief system was basically 250,000 a month, and now it has come down to 100,000 a month. The question is whether it is correct or not. So are we collecting taxes from the correct places? Sri Lanka has a very low tax to GDP ratio, so Sri Lanka has to collect more taxes. So I don't think there is anyone will say no to that. So the question is, are we collecting the two things? One is, as a policy, have we designed our tax system in such a way to collect the tax gap, the required taxes from the right places, right sources? That's one. Why I said that is, okay, when you look at the individual income tax system, before 2019 or always in Sri Lanka, we had what is called a progressive tax system. So you have a threshold and then the size of the tax slab and the rate is what decides basically whether the individual tax system is equitable or not. Right? So now what happened in 2024 is what we had, the progressive tax system became almost close to what is called a flat system. Flat system means irrespective of your income, you have one tax rate. So now in countries like America, they prefer a flat system. Why? They are basically all are developed, and it's from the point of view of administration also, it is easy to go for a flat tax system. Always the rich man will say go for flat tax system. Whereas the person who gets low income, compared to the income that they get in a flat system, the low income earner pays more tax. The tax fraction that he pays is high compared to the income that he gets. Whereas the rich person, in a flat tax system, he thrives because compared to the income that he gets, the tax component that he pays, the fraction that he pays is low. So now what we have now is a designing of the individual taxes in such a way to collect the taxes from the masses. I would say if it's like a pyramid, you collect taxes from the bottom here, from the masses. So why? Because the threshold was brought down, the slabs have been thinned. So because of that, the situation that we're having is because of that. So when you look at the highest tax rate in Sri Lanka, 36%, one reaches when for a year, when a person who has 3 million and 80. So they are about basically comes to 36. From there onwards, everyone is at 36. So if you ask the question, okay, how to make it equitable if I have my way, I'm going to
increase the threshold. That was the election promise where they said okay to increase, so that should happen. And when you do that thing, there is going to be a tax loss to the Inland Revenue Department. So you can't basically give the relief here without collecting the taxes from the top. So the 36% will have to go up. And in between, you have to also create tax slabs. Sometimes what we have is our uniform tax slabs. We need to have maybe some thick tax slabs in the middle. So basically, say up to 5 lakhs or so, basically, the middle class to be protected. Now, if you tell the question that Tumilan is asking, okay, we do find basically because of this tax system, many of them are going out. Right, the answer to that is, yes, we do find a lot of professionals, individuals going out, but that's not exactly because of the tax system also. That is because there is loss of cost of living and loss of hope, loss of, educational opportunities for the children. That is the reason why most of them are going out. Tax is just a part of the thing. It's not just the tax. But at the same time, when you're talking about the professionals types, because this is something that I have seen, yes, when you take the category like university lecturers, now when you see their sources of income, it's the salary that they get and maybe a little bit of a bank interest. And if they're doing some little bit external work within the education sphere, so they make it a fee. Now, those sources always come with deduction of withholding taxes. So there what happens is invariably they pay the right taxes. They don't have, to manure also. So now here what happens is, among the other professionals, university professors are moving out. Now when the university professors move out, that is a disaster because it's the quality of the professor that in the professor or the lecturer in the university that decides the quality of the graduates that are studying there also. Future graduates that are coming out. So actually nobody, though people have not spoken a lot, that category should be looked at very well into the future. So engineer goes, okay, we will have more engineers coming out.
Now, what is more important is tax gain or the human resource. Now, because of tax gain, there is a loss in human resource. In our industry, we have a crisis, human resource crisis. You are trying to gain tax, we lose people. Okay? And we are trying to gain tax, we lose SME sector. For last 4 years in construction industry, 3,500 less registered, 3,500 may have gone out of business. Okay, you're trying to work out tax gain, you lose SME sector, especially the medium and micro. And for us, consultancy services, I'm in all, my main problem is technology adoption. You tax technology. Difficult to bring the technology and export the service. So you are trying to gain tax, but we lose our business. So where is the balance?
No, correct. I agree what you're saying. Basically, what happened to the SME is a very unfortunate thing because, again, as I pointed out, in order to come out of the financial crisis without basically doing any planning of the designing of the tax system, we took the shortcut. We just created one single uniform tax rate, and then it was easy implementation. But what happened was SME sector, their taxes doubled, whereas the standard robust companies rate only by 2%. So where is that tax cap that is being collected from in the corporate sector? It is basically from those SMEs and the, the preferred industries that the country was trying to promote. It is from them that the taxes, corporate taxes are being collected. See, so this is what I'm trying to point out. Basically, what happens is, okay, with regard to the individual taxes, where are we collecting the taxes? We collect the taxes from the bottom. Even in the corporate sector, where are we collecting the taxes from? We are collecting it from the preferred industries and the SME sector.
But Mr. Suresh, actually adding to his worries is actually last few months or 1 year, around 2,60,000 SME has been shut down as per the report, and so much of employment also lost and expected to go more. The main reason is one is bank interest charges, which is entrepreneurs are not liable, honestly. They borrow at 10%, start some business, as he said, put the plan, suddenly rules change, plants are shut down. But banks are auctioning the property, that is auctioning the property to transfer to a property to a sales certificate at the rupees of 1,000 rupees. Here also another question, whether the banks, when they do auction and transfer the property to 1,000 rupees as their sales certificate, are they supposed to pay stamp duty or not necessary? Number one question. So guys, there are so much of defrauding stamp duty in that category. So what they are doing is they are auctioning and transfer their sales certificate. They are saying no one has come to purchase, put it to the bank name, and they find the known people and resell. So we highlighted to the ministry, they know very well with the example. So in that case, are those banks are supposed to pay stamp duty when they transfer to the 1,000 rupees sales certificate?
Okay, the stamp duty one I want to start with the provisions and get back. But what happens in auction when this transfer happens, in the VAT Act, VAT is on either supply of a good or a supply of a service. So in the definition of the supply, basically the auctioning, sale in auction is basically captured. So the VAT charge basically comes in there.
Not VAT, stamp
Not
duty.
VAT,
So
stamp
because
duty,
they are registering in the land registry also, their name. Bank is taking over and registering in the land registry. So theoretically, they are the temporary owners of the property and they are getting eject orders also. So the occupation also, because some of our MSME members are worrying, taking. But bank never pay. This lakhs and lakhs stamp duty can be collected from them. As you're saying, you are always taxing the bottom line, not the top line.
Stamp duty and I have to check the provisions and
Sure,
get back.
thank you.
Sure.
I think Mrs. Sandeep.
Sorry?
Yes, you are saying something?
No, no.
One or two things, just, we are asking questions to each other, but I think we are in a very, very different mode, I will say. So let me share my experience as an individual, not my company, as an individual. As Professor Jayan said regarding India example, when we are coming out of university in early 90s or so, it was in a very, very difficult situation. Even our gold was kept with IMF, London Bank or something, if somebody traced that India's history that time. But over a period of time, then privatization happened, Manmohan Singh, Narasimha Rao, whatever things happened, and now it came in good shape. And last 10 years has been really good. I remember we were not able to count our people, 1.3 billion, 1.4 billion, people did not have any identity card. Then somebody pulled out a person from IT sector, Nandan Nilekani, right? Infosys gentleman. He was given a cabinet rank and then he made this Aadhaar card possible. So everybody has got a NIC number. What you call here NIC, we call it there Aadhaar. So that is there. And then I think things are looking good for our neighboring country India and possible things. Now what I can see, in case of Sri Lanka also, things are quite optimistic, positive. Now you said regarding the real estate industry, Mr. Tumilan, that why will they give premium? I was calculating the cost of material. Now in Bangalore or Chennai, 350 rupees Indian is basically the bag of cement. I just calculated 350 multiplied, just do the calculation, 1,260 Sri Lankan rupees, 8 transport, is our cess, right? Whatever duty we are paying, and all those things, then it is roughly whatever price is there, that is okay, not bad. Yes, there is a possibility it can come down, but at the same time, quality of life, if you see in the entire region, as an expatriate living in some place in Sri Lanka, my family, whatever, education, quality of English speaking people, medical facilities, primary, I'm not talking secondary, tertiary, the cars available, everything. In today's situation also, quality of life is much better. So many people, they would like to come if we are able to maintain little bit consistency in policy, that's all. As a business people, as an investor, what we want, we don't want any support. We don't want any tax concession, nothing. We just want that you tell us that next 5 years, this is going to be there. one Friday evening when we are enjoying our weekend, we should not get a gadget that says has become 2 to 4 or 4 to 5. And our weekend is, gone. So what I am trying to say, all those things are in a lighter mode. So that way basically is a very good place. And as a cement company, what could be our interest to continue despite losses? We are making losses because of this issue. What we strongly feel, one slide actually I did not point out one particular figure. World cement average per capita consumption is roughly 515 plus. 4 billion ton of cement is required in the entire world, and population, all those things, 515. In Sri Lanka, in peak time, we have 315 kg per person per year. It came down to 180 kg per person because of this situation. Again, it started moving. So we are definitely going back to 300, definitely, right? And then in between 300 to 500, the peak time and the world average, still there is a scope. So Sri Lanka will definitely have a lot of. Now, question remains of this intermittent period, because how to tackle the situation, immediate situation. We can talk philosophy for 5 years, 10 years, that is okay. What to do tomorrow? As a cement company, I think we have partnered with many of our customers here, and we ensure that if we are given a fair deal with a gentleman's agreement, I think we are taking care of everything in terms of pricing, in terms of supply. Only thing what we want, payment in time. That's all, because there is a rotation requirement. So possibly we will be able to help out in our limited means, because we are committed. Come what may, we have got vessels, our cement will keep on coming, clinker is available, not available, we will be there. So possibly in our limited way we can help, and we can hope for good situation for Sri Lanka also. And you just see, two years back situation and today's situation, I think quite good.
Fortunately, we are clinging also coming from India. Egg also coming from India. So if our fiscal policies are correct, we had a KK cement factory, which is closed down, and Puttalam is closed down. So we are, as he said, our industrial policies. We are talking about affordable housing scheme, which has been started by UDA. Again, they couldn't afford to give in that price because of the material cost escalation. Many contractors suffered with their integrity and all that, even without payment also they continue. So what we would like to have is Sri Lanka localized industries, Sri Lankan, because even egg goes came in 70 rupees, luckily now it has come to 40 rupees. So what is happening, as he correctly said, one of the member, sometimes tax policies, the industries are closing down, we are allowing imports. Now example, if you take even the food crisis, we said by using urea, kidney problem is coming, and the stop urea, then harvest is come down. Finally, we imported everything from overseas, Pakistan, Allah, from India rice. So that rice, we are not looking what is the urea we are using. So therefore, please, we are asking the policy makers, make appropriate policy to survive the industry first, localized industries. Otherwise, we are killing the localized industries, and the foreign companies are entering to Sri Lanka, which is not a good sign. We are worried about foreign currency. Our foreign currencies are going out of country. When the contractors, overseas contractors are now bidding lower than us because they are capable of bidding. And even we would like to say that preferential treatment in the port city, we had a discussion also. You see, for them, tax holiday. For them, VAT exempted. But we are selling in the same market, the apartment. So localized contractors and the developers has been penalized. International people has encouraged by the tax allowance and all that. So what is your opinion, Mr. Suresh, on that? That we said the port city, they have a preferential treatment.
See, port city means basically only a person who is registered there as an authorized person, and there's another license called business of strategic importance. That's where basically the person gets the tax concessions. But the important thing is port city business can only do offshore business. In our Companies Act, there is a separate chapter called basically overseas companies. offshore companies. Offshore companies can get a registration under the Sri Lankan Companies Act. It can carry on business outside Sri Lanka. It can't carry on business in Sri Lanka. That is a normal offshore company regime. In the port city company regime, it's almost the same. The only addition is they can carry on business within the port city premises in addition to carry on business outside Sri Lanka. But they can't carry on business in Sri Lanka. Under exceptional circumstances, the Port City Act permits to obtain permission from the Port City Commission and carry on business transactions in Sri Lanka. But the profits that derive from those transactions are subject to normal tax laws. The Port City exemptions that have been given are not applicable for that business transactions that are carried out with the permission of the Port City Commission.
Just one thing, thanks, it is good to have clarification, sometimes even the wrong impression also, as Mr. Tumilan said. One clarification on cement and clinker, except bulk cement which is coming only for our company, entire clinker, other cement is coming from right now for last so many years, Pakistan and UAE. Just for information.
Let me ask one question. Mr. Tumilan said that we have to just encourage localized industries. True, I agree with you, but we can't apply that on every industry. Especially if I take the cement industry, Sandeep knows very well, right? We can make only 10% of local requirement locally. Rest has to be imported. Unless we start KK's factory, we have to depend on 10 to 8% maximum local production. So other than that, the rest we have to import. What has happened last couple of years, just after the COVID and the economic crisis, in the name of local industry or the value addition, consumers are paying more than 2-3 billion rupees a year to protect, not the government, actually tax policy makers, you have to just open your eyes and see, in the name of value addition, they have restricted imports. Right? They have restricted imports, and consumers are paying more than 200 to 300 rupees a bag to protect those local industries. That money doesn't go to the treasury or the inland revenue. That goes to the investors who just build the cement factories. Right? That has happened, especially in my IMF report last time. IMF has clearly written that the involvement of politicians, they have changed the tax policy overnight. Right? You just take the tile, what has happened? Cement is all the same. I calculated only in 2023, people have paid 2.3 billion rupees. That money, that should remain in the pocket of the consumers, but it has gone to somewhere, not to the government. So that's why I don't agree when you say local industries, that is not common for all. Other thing is that the tax experts I want to ask, when you say that the professionals are paying 36% of the pay tax from our, suppose that...
No, 36% is the highest
okay,
rate in Sri Lanka. It's applicable for everyone.
Yeah, after paying 36%, just take the highest slab, 36%, I use that remain to buy cement. Right? Cement, it is 35% tax again on cement. Then we are paying 70% tax. Cement pack, 10% PAL.
You can't calculate like that.
No, I mean, but you see that most of the other things also tax, no? We are paying direct tax and indirect tax. Correct. That's because of the tax policy.
So that is the tax system in Sri Lanka, not just direct and indirect. If I put like this in Sri Lanka, when you calculate the different types of taxes that you have, you find something in excess of 25 taxes in Sri Lanka, in excess of 25 taxes. We are just talking about income tax, VAT, social security contribution, stamp duty, or maybe telecom levy, or maybe tourism levy, like that. Basically, but if you actually calculate everything, the taxes that are coming from the applicable in the main taxes, plus the taxes that are coming from the provincial council, etc., when you add all those, you will see in excess of 25 taxes are applicable in Sri Lanka. So good to be a tax consultant.
No, anyway, the rest we have to spend in the market no, to buy other things. For those also tax. So if you just take the total tax portion, that is not the 30. We can say, okay, we are paying only 36%. We can just say we can wash our hand. But that is not the case. When we buy other things, again, those are also taxed. Right, if you
Yeah,
just
let me give you the, yeah, let me give you the perspective. It's like this.
Yeah, so yeah, that is this thing. So Lalit, so no comments on particular thing.
You see, he is very happy. We are expecting more sales from India for the apartment because he said here is a very cheap compared with India. Cement price also. So we hoping to receive. Anyway, in summarize actually your view, one is what we worried is actually global competition has to be there. I agree. Local industry, I'm not asking to protect in 2000 rupees tile and the import tile is 600, which is not acceptable. But now the dollar is coming down. Material prices can easily brought down because now 285, 95, like dollar is dropped from 340. But still the price in the cement and other material, we feel it's not a significant reduction. That's what our worry is because it is affecting our industry. But as you know, even though the selling price of the apartment is fixed, we can't increase the price to the customer because courts are giving order. We can't increase the price to customer because of specific contract. So in the contract also, we can't specify the price is variable. So you all had to support us to our industry with the tax policies as well. Anyway, Priyanti also we had to give a chance. She did a nice presentation and she said our tax system is very complicated. And make it simple, then we don't need a tax consultant also, actually.
Actually, there are a lot of taxes that as Suresh mentioned, especially I mentioned about the custom duties. In some countries, only the flat rate is there, but when compared to Sri Lanka, when we check the Cusdex, there are applicable taxes are different taxes. So that's why there should be a simple tax, then all can understand what is there.
No, that's an important point. Basically, it's like this now. We all say that Sri Lankan tax system is complicated. We need to simplify the tax system. We need to simplify the tax return. We keep speaking. But actually, how do we go there? Let me ask, how do we go there? Who's designing the Sri Lankan tax policies? What is the system that we have? Sorry? No, IMF, okay, during the last few years, maybe IMF have had an influence, but actually it's not their final say. IMF basically is ensuring, it's only trying to ensure that the amount of taxes are collected so that they can get what they're lending, they can recover. The point is in Sri Lanka, we don't have a proper body infrastructure to formulate tax policies in the long run in the best interest of the country. We don't have that. Our problem is we don't have that unit in the finance ministry. So finance ministry, there's the finance minister, there's the secretary, and there's a tax advisor. And then when the budget gets closer, basically lobby groups go and give their proposals, which are in their interest. And that is how basically Sri Lankan tax system is being, designed or formulated. What we need to have in Sri Lanka, this is in the IMF website also, every country should have what is called a tax policy unit. That unit should not have influence coming from the politicians. Basically, that unit has to develop short-term and the long-term policies for Sri Lanka, looking at every aspect. Okay, lobby groups, when they come and ask something, they should do that should go through this unit. It is this unit that should study and decide independently what they are asking, is it in the best interest of the country?
But Mr. Suresh, it's a controversial question. We have a body called Institute of Chartered Accountants of Sri Lanka, where it is incorporated under the Act of Parliament. So there is something called Faculty of Taxation, and we have Institute of Taxation. So don't you have corporate social responsibility to advise the central bank, Inland Revenue and IMF challenging their inappropriate policies?
Now, I can't speak on those institutions, but at the same time, they do, my understanding, all of them basically do their set of proposals also. But this job of basically designing the tax policies of the country cannot be done by those institutions. They have their own objectives, right? So, but the Sri Lankan government at the finance ministry, there has to have this tax policy unit. So what is in this unit in a nutshell? Basically, you should have a subunit called for direct taxes, subunit for indirect taxes, subunit for international taxes, and another unit, most essential unit, basically to do the number crunching, cost benefit analysis. Now, when you're giving a tax holiday, when you're giving a tax concession, there is always a cost to that one. Is there a benefit in doing this tax exemption? So that calculation to carry out, there has to be another subunit there. And then, of course, the legislation drafting unit to help the Attorney General's department. So this is the composition of what is called a tax policy unit. To me, establishment of that unit at the Inland Revenue Department is the first step in rectifying the Sri Lankan tax system. Otherwise, what happens is at the seminars and everywhere, we are just speaking, bringing our grievances, but at the same time, nothing is being done to stabilize our tax system in the correct scientific way. So that is what we need to have first place in Sri Lanka.
I would like to add something for this content, and for this year of assessment 23-24, we have introduced simplified return because of this complication of income tax return. So those who have only the interest income and the employment income, then that persons can submit the simplified return. All the incomes will be populated, and if there is any change of that income, that can be amended by the taxpayer. So that is the one step we are taken to simplify the tax return. And I should mention another thing. As a Sri Lankan, we also change our mindset to pay the correct tax. Even though professionals live outside from the country, they are not exempted in other countries. Maybe they have to pay more taxes than Sri Lanka, but they live in the country because they don't like to pay taxes in Sri Lanka. I don't know what is the reason. They learn from government money, and then they, after taking qualifications, they leave the country. Then actually it is not good. We should change our mindset to pay the correct tax liability. And another thing I have to mention that you said about the India is so developed now. Actually, I also agree with that. And that people, I think they comply to the law. And they have, in the India recently, they have taken step that to minimize the cash transaction. That things, I think it take a better, it's a better action for the collect tax liability. In our act also, we also introduced that type of provision to limit the cash transaction, which is over 500,000. I think in the future, with these amendments and actions taken by the department for data sharing, that things, I think in the future, we can collect correct tax from everybody.
Thank you, Ms. Asani. Actually, it's a very good conclusion. I think there's a lot of money in the black market. As India did, we had to stop these 5,000 notes. So all the black money market immediately will come to the cash flow cycle. India did that one during some period. It's a good suggestion and encourage cash transaction. Actually, we don't need to increase any more taxes. The existing black money in the market, especially from professional who are practicing, central bank governor himself said from whom they had to collect the money. So the system is they doing the cash, especially people practicing and all that. So it was an excellent conclusion, Ms. Asani. Our objective also, as you said, we had to change our mindset because it is our nation. But I think Suresh said the second R is distribution of money, facility to the rich to poor. But sometimes we make the people also lazy and inefficient. They don't want to work because they used to get free money, free education, everything, even they capable of paying. So with the universities can generate their own income by having MBA courses, PhD courses like that. So our tax rate no need to increase anymore. We need to increase our efficiency of our Sri Lankan lifestyle. But of course, you can charge very high taxes for the luxuries and all that. There's no argument. So please look into our industry because we are struggling very hardly. Not only contractors, even consultants are suffering. So please look into our policies. Thank you very much for everyone. And we had a nice time. So time is up, I think, for the tea break. Thank you.
Thank you, everyone. Actually, there's a small segment before we conclude the session. Thank you, everyone, for an engaging and insightful panel discussion. Please be seated. There's a small event that we have to conduct, presentation of mementos. I invite you all to be present to the small segment of presentation of mementos. Okay, now it's the moment to sincerely appreciate the invited speakers who dedicated and determined their valuable time to this event. To present the mementos, I would like to invite Architect Jayantha Pereira, President, Chamber of Construction Industry of Sri Lanka, to the stage. To join him, I invite Mr. Nissanka Wijeratna, CEO, Secretary General, Chamber of Construction Industry, Sri Lanka. First, I encourage everyone to join me in welcoming Mr. Suresh Pereira, Principal, Tax and Regulatory, KPMG Sri Lanka. Next, I am excited to invite Ms. KGC Priyanti Manike, AGM Finance at Sunchem Overseas Private Limited. These mementos will showcase the strong bond between the institutions and the Chamber. Next, it's my esteemed pleasure to invite Ms. S.I. Asante, Commissioner, Tax Policy, the Inland Revenue Department of Sri Lanka. It is my privilege to invite our next speaker, Mr. Sandeep Hole, Director and Country Head, Ultratech Cement Lanka Private Limited. Finally, please join me in welcoming Mr. S. Sumilan, Treasurer, Condominium Developers Association of Sri Lanka. Thank you very much for moderating the panel. These mementos will represent how grateful we are. Thank you, sirs. Ladies and gentlemen, with that, we have come to the end of the session. Today, we have covered a wealth of knowledge and practical strategies in regard to the tax issues concerning the construction industry, and your active participation has truly made this event a huge success. So I would like to take a moment to acknowledge Architect Jayantha Pereira, CCI President, Board of Directors and CCI Council for guiding the Chamber of Construction Industry to success. Engineer Nissanka Wijeratna, Secretary General, CEO, for leading the organization. Thank you to all the resource speakers for their valuable sessions. Mr. Suresh Pereira, Ms. KGC Priyanti Manike, Ms. S.I. Asante, Mr. Sandeep Hole, Mr. S. Thumilan, and all the other speakers. Special thanks goes to staff members of CCI for their fullest support, and also to the members of GapHQ, including Professor Ranjit Disanayaka. Special thanks goes to our sponsors, main sponsor Ultratech Cement Lanka Private Limited and co-sponsor China Harbour Engineering Company Limited. Thank you all other supporters who helped in numerous ways to make this event a huge success. Last but not least, we would like to thank all participants who join us physically and online. So it's time for us to conclude the online session. All the physical participants, please enjoy the refreshment arranged in the foyer area. So great things always await us. I'm Sadisha, your event host today. Have a great evening. Thank you.